This is Hot Issues, your passport to the most compelling conversations of our time. We go one-on-one with the movers and shakers, the thought leaders, and the game changers. We ask the questions that matter, and we don't back down. Tonight on Hot Issues, I sit with the man at the center of corruption investigations. Join me on Hot Issues here on TV3.
Hot Issues now shows on Sundays at 1 p.m. on TV3.
TV3, first in news.
The Key Points is brought to you by Bank of Africa, GASM.
Whether doom CSCA, doom or doom cry or doom so, the first thing is, let's be honest. Look, once in a while we can have challenges, like we are just witnessing. Unpredictable, nobody foresaw it, nobody could tell the magnitude of it. And when you have such a situation, don't try to play tricks with the people. We have a deficit. And we've admitted that because of the fire incident, we have a deficit. I've directed ECG provide periodic updates on regional basis, areas that will be affected every 12 hours, because it's a very short duration. Like I said, we are looking at this week. So you can't do a weekly schedule. And even what you provide a day, it keeps changing, because just this afternoon, we've had another plant come on. We are looking at another unit coming on. So we provide that periodic update. People are not happy. That's a fact. But I know that people are discerning. People are very discerning. Ghanaians have the wisdom. And they know that we have a legitimate, genuine challenge that is not of our making. And they know that we are putting efforts to address that. That is a better approach than telling the people that you are engaging in doom CSA.
So that was the Minister of Energy and Green Transition, Dr. John Jenapo, there. And this was sometime during the week. We all do know what happened a little over a week ago when the control room of the Akonsombo Dam, that particular critical facility that ensures the transmission of power to Gridco and onward distribution by ECG to the Ghanaian people, was gutted by fire a little over a week ago. Now, the good news is, as has been praised by the President and the Minister himself, the level of ingenuity and hard work and creativity of the engineers at the at Gridco and VRA, they have been able to turn around the situation. And now all 6 units that went off as a result of this fire outbreak are back on stream. So that period of the exacerbated doomsday situation, or the lights going off, has been reduced, or in fact addressed. And we've seen this improvement in power supply. But questions still linger as to, before this fire outbreak, there were pockets of lights or electricity being interrupted as a result of what the ECG said was planned maintenance and also replacement of some faulty transmitters and so on. But what exactly is the issue? What kind of energy sector are we dealing with now? and I'm talking about the power sector specifically. What kind of power sector are we dealing with? What was the case? Because this improvement and the replacement of what we are being told now, there was an exercise that was carried out a couple of years ago for that same purpose. So the questions on the minds of you, the Ghanaian people, on the key point is what exactly is happening now. We'll have a conversation this morning here on the key point, and we'll have the Energy Ministry represented, and we'll have some energy analysts as well to help us understand how the way forward should be, so as to ensure that we're going to come back to this point again. But clearly, the development regarding this fire outbreak has given us another layer of consideration, an idea to talk about, taking into consideration the work that the engineers have done. We'll have a conversation this morning here on the key point. Also, just over the last 48 hours, the Bank of Ghana published its accounts for the year 2025. That's the year 2025, that's the year under review. One of the big highlights and the big takeaway is the loss or operating loss that the bank has posted, over 15.6 billion Ghana cedis. Over the last 16 months, there's been substantial and significant development in the economy. This was achieved as a result of economic decisions that were taken. Now, the cost of the economic development that we're experiencing now is what we are seeing. What we're asking this morning is there justification for this? Taking into consideration the economic development that we have experienced, could this have been done differently? We're seeing total assets grow to some 237 billion Ghana cedis from 215 billion Ghana cedis in 2024. This morning, we'll have a conversation also about what the way forward is, especially for the domestic gold purchase program. This is our focus and the key issues on the key point this morning. So stay with us. We have officials of the central bank here to answer the questions that you have put to them. Quite a number of you have sent us, as we always do, when we put out the notice of who is coming on the program. A number of you send us questions. We'll put it all together and put it to them so they answer for the Ghanaian people. Stay with us. Now, we're not going to go for this, the break. We'll continue the conversation. The officials of the central bank who are here will be joining me in the next 1 minute. We'll take their seats. But let's hear from the governor of the central bank, giving us a clear indication of the policy direction and the thinking that goes on at the central bank and how the next months ahead of us will be, taking into consideration the decisions being taken, the policy being implemented, and the way forward. This is Dr. Johnson Pandit Esiama. Take a look.
Our decisions are data-driven and forward-looking. We do not respond to pressure. We do not respond to speculation, and we do not respond to sentiments. We respond to evidence. We respond to risks, and we respond to the medium-term outlook for price and financial stability. Second, we prioritize stability over speed. In rebuilding credibility and restoring order, quick fixes in many cases are rarely durable. Our focus has been on policies that can be sustained even when they are uncomfortable in the short term. Third, we operate an institution not as individuals. Central banking is collective. It is disciplined work, and decisions are taken through established frameworks, informed by analysis, debates, And yes, we do have lots of debates in-house, as well as professional judgment. These principles, their benefits are really immediate, what we call policy lags. Our decisions are data-driven and forward-looking. We do not respond to pressure. We do not respond to speculation, and we do not respond to sentiments. We respond to evidence. We respond to risks, and we respond to the medium-term outlook for price and financial stability. Second, we prioritize stability over speed. In rebuilding credibility and restoring order, quick fixes in many cases are really durable. Our focus has been on policies that can be sustained even when they are uncomfortable in the short term. Third, we operate an institution not as individuals. Central banking is collective. It is disciplined work, and decisions are taken through established frameworks, informed by analysis, debates, and yes, we do have lots of debates in-house, as well as professional judgment. These principles, their benefits are really immediate, what we call policy lags.
Well, that's the governor of the central bank there, giving a clear indication of how the policy thinking takes place at the central bank. This is the key point. We're live on 3FM 92.7, also on TV3 Ghana on Facebook, and on DSTV channel 279. We're all across the world on 3news.com. We're also on the Voice of London radio in the heart of the City of London, and Voice of London television as well. Now, this morning, in the last 48 hours, the conversation has been about a number of things. What exactly constituted to the Bank of Ghana's accounts, as we are seeing, the specific instance of the loss, the various components of that particular loss, the overall performance of the central bank, and what the next phase of the central bank's operations will be. Where we are coming from, what necessitated some decisions that we're taking, and how that influences the way forward. That's going to be the conversation this morning here on the Key Point. But earlier, after the release of this, in fact, even before this particular accounts were published or were made public, the majority in Parliament gave an indication of one of the two issues, which the minority also has been responding in a number of interviews. I want us to take a listen to the majority in Parliament also give indicators of exactly what was captured in the report. This is Honorable Atta Issa. He is the Sagnerugu Member of Parliament who addressed the press earlier. Take a look.
Secondly, the cost of building reserves through the gold purchase program. The accounting cost of the gold purchase program stood at 5.7 billion Ghana cedis in 2024 to 9 billion Ghana cedis in 2025. The program accumulated approximately 111 tons of gold in 2025, up from less than a ton in 2021. The gold itself has not been lost. The reserves are real. Let me now take you into the details of the gold purchase program and its impact over the years. In 2022, the total number of volumes that the Bank of Ghana acquired was 3.4 tons of gold, with a value of $194 million. And the cost of achieving that was 74 million Ghana cedis. In 2023, we achieved 37.02 tons of gold at a cost of $1,554 million United States dollars, and we spent 1,372 million Ghana cedis. In 2024, we achieved 54.47 tons of gold, and we spent $4 billion United States dollars and spent $5 billion in terms of cost to achieving that.
Welcome. This is the poll tracker. And it goes without a doubt that Ghana's economy has made some significant progress over the last at least 16 months that we're looking at. Now, the evidence in the macroeconomic indicators, which I'm going to show you in a bit, have not been disputed. Inflation is down. The CD is stronger against the major trading currencies. Lending rates have declined. The trickle-down effect for many Ghanaians, that is real, and it matters in analyzing the state of affairs that we're going to be looking at in the next few minutes. But two things can also be true at once. And the stability achieved by the performance of the economy we're seeing through this harmonized fiscal and monetary policy direction did not come for free. Now, to every economic decision, obviously we have to acknowledge the cost to it. On the matter of the cost, the Bank of Ghana points to its mandate and the outcome of the economic decisions that have resulted in the stability that we're seeing and the cost on its books. And this is the mandate that they talk about. I'm going to put it on the screen right now. The primary objective of the central bank to maintain stability in the general levels of prices as stated under Section 3 of the Bank of Ghana Act 2002. In fulfilling this particular mandate, we've seen the central bank do a number of things. So was this 15.6 billion a cost worth bearing based on the policy outcome, or a cost too much to have been borne? Follow me closely. And this is where we get into the nitty-gritties and what has become a big matter of debate. This is it. The coordinated response of the central bank over the last 16 months to respond and to rebuild confidence based on what was the case after 2024. Tightening monetary stance, addressing excess liquidity, strengthening external buffers, and strengthening the financial sector. And this is it. So when this matter of the cost came up, these were some of the indicators that they pointed us to. Now we're talking about inflation as of the end of December 2025, dropping from 23.8% to 5.4%. We're talking about gross international reserves as of end of 2025 December, up from 9.1 billion to 13.8 billion. We're talking about the current account balance of 9.4 billion, up from 1.5 billion. All of these, the central bank is pointing as to these indicators. So we juxtapose that with what has been reported now. We're going to get into the details of exactly how the next phase would look. And also taking into consideration, for instance, the depreciation of the cedi, or the appreciation of the cedi against the major trading currency, which was a major issue over the last 16 months. Because of the gains that the cedi appreciation has brought to the economy and how that has also impacted or influenced the economic development that we are seeing right now. Well, another guest who are going to be joining me later also talk about the price we have to pay for the appreciation of the cedi as well, which, but for it, may be the export revenue that we're talking about now as a result of the export of gold, for instance, for the most part of 2025, would have been higher than what we are seeing. But if you look at the export revenue that came in as a result of the export of gold, which is going to be one of our major issues to talk about because of the Bank of Ghana's domestic gold purchase program, big. majority of our export revenue for the year 2025, which is actually the highest we've seen in history. The export revenue that we got in 2025 is the highest we've seen in history. And most of it was driven by gold, the export of gold. If you see our gold reserves over the period, we saw a spike from the most part of 2025. And that's the analysis that we've seen. So take a look at this. Right from 2,622 down, that's January 2025, up to over 3,427. Now take a look at this. We have seen the export of gold rise, and that influenced the kind of revenue that we also recorded in the year 2025. Now the big question is, what exactly is going to be the way forward regarding this domestic gold purchase program and the Bank of Ghana's open market operations as well, which are the two major issues or the major expenditure items that contributed to this loss that we're talking about, and why the Bank of Ghana is also having to answer questions regarding this particular development. And we're going to show you in a bit and also give you an idea of how the way forward will be. Now look at this trend and keep that in mind. We're going to put that on the screen right now and also give us an idea of how the trend will be going forward. My guest this morning to have this conversation about this, the next phase of this domestic gold purchase program especially, and then also the open market operations that the central bank also engaged in, are two officials of the central bank. And let me just indicate that as we go on, my guest will be joining them. Gershon Agblejewu is a head of financial markets department, and also Paul Blebo is head of the gold desk, financial markets. That's the financial and market department at the central bank. Gentlemen, good morning. Thank you for joining us.
Good morning. Yeah, good morning.
Perfect. So it's good to have you. But prior to your coming, we got quite a number of questions from our people, as we do. But first off, I showed a number of things, just to put the issues in context. But the two large expenditure items that we have seen make up the big issue of the loss is your open market operations and for the gold for reserves, the domestic gold purchase program. But give us a general overview of exactly what this account that you have published was supposed to communicate. I start with you. Yes, sorry. Any of you can.
Yes, so thank you very much. I will briefly talk about the domestic gold purchase program. As you mentioned, there are two layers to this account. And I would like to talk mainly on the domestic gold purchase program. The other component to be handled, by my colleague or any other, guest that you may have here. So remember that between 2020 to 2022, the economy experienced a very severe macroeconomic volatility. Within that period, we had a severe external shock. You remember, COVID-19. Mm-hmm. You remember Russian-Ukraine war, and as well as our debt sustainability concerns. So as a result of that, we lost access to the international capital market, and also domestic financing was highly constrained. What happened then? We saw our reserve going down, dwindling, and then we saw inflation going up, and then a sharp depreciation of the cedi. Mm-hmm. Now, the domestic gold purchase program was launched to address this, or to address the effect of this macroeconomic volatility.
So they started from 2021.
Yeah, 2021.
The domestic gold purchase program.
Exactly.
Okay.
So it was launched, in 2021, July 17, 2021, and mainly it was launched to actually address this effect of this macroeconomic volatility in a system. Now, what happened next? So, as we experience this sharp cedi appreciation, inflation skyrocketing, we had to think outside the box to do something extraordinary. So we realized that gold is a reserve asset. Now, what can we do with gold? Right. So we have gold here in Ghana, and we have cedis. So what we can do is to leverage on these two things. Use the local cedi to buy the gold, and then export this raw gold, outside, refine it, and add to our reserve. And when we did the feasibility studies, we realized that, hey, we can buy gold using our local cedi and then increase our reserve. So this was the main reason for the launch of the domestic gold purchase program.
And when they started in 2021, in fact, based on the data that I have, which is you published, 2022 you have 3.5 tons valued at 194 million.
Yeah.
Ghana cedis. The cost associated to the program then was 74 million.
Correct.
Then in 2023, you increased to about 37 tons.
Yes.
Valued at 1.6 billion. But the cost of the program was 1.4 billion.
That's correct.
How come?
Yes,
that particular year? Because that's just about, that's almost the same as the value we got for the gold.
Yes, so remember, we launched the G4O program. Remember, G4O is a product of the domestic gold purchase program.
Right.
So when we were faced with the acute fuel shortage, at the pump, the authorities decided to, come out with a G4O program. And G4O program, we were buying the gold locally and exchanging that gold with the fuel importation. So you see that
Let's go for oil.
Yes,
just for the communication.
Yes, so the quantities increased from 2022, 2023. So the jump is as a result of the Go for Oil initiation. Now, remember, around that time, the Minister of Lands and Natural Resources issued a directive, to all miners, and that, PMMC is going to buy gold, on behalf of Bank of Ghana, and is going to buy that gold, with no discount. It was a way to ensure that there was enough gold for the program. So that is why you see that there's a huge jump in the quantities, and then in terms of the
cost as well.
Yes.
I'm looking at the cost.
Yes.
I just wanted you to explain to me the cost structure of the program. Has it always been the same? Because I'm looking at the trajectory right from 2023. You explain what happened. The total value of the 37 tons we have, 1.6 billion. The cost associated with the program at that time was 1.4 billion. Fast forward to 2024, it increased to 56 tons. We had 56 tons of gold in our reserve. You valued it at 4.1 billion. And the cost of the program in that year, 2024, was 5.7 billion.
Yes.
Which was more than even the value of the gold that we had in our reserve.
Yeah.
Explain that to me. Why?
Okay. So, yes, as you mentioned, there's cost to everything, and there's cost to stability. So, yes, 56 tons of gold valued at $4.1 billion. Now, the cost structure has not changed since the inception of the program. The cost structure has been the same. There are four main cost structures for this program. Now, we have what we call the rate gap. We have what we call the off-taker discount. We have what we call the assay fee. We have what we call the service fee. And then we have purity losses. Okay, now, how does it work? The rate gap. You know, remember, Ghana, we buy gold in Ghana cedi per pound. Okay, so the rate, the foreign exchange rate that prevail in that market is different from the rate that prevail in interbank.
Okay, so what you're saying is that the rate at which you buy the gold in the open market, also from small scale,
yes.
miners,
yes,
is higher than the rate at the central bank.
You know, at the interbank. Interbank, yes.
So you are buying the gold at a high price.
Yeah, at a high rate. Yeah.
High rate.
Yes.
You know, but then again, you are selling at a low rate.
Yes. No, so it's not that we are selling the gold at a low rate. So the gold is purchased at a certain rate, you know, in the gold market.
Right.
Now, when this gold is shipped outside and, you know, the foreign exchange that we get from the sale of that gold,
right.
you know, as a bank, we have a policy to use a certain rate, our official rate, to convert that process into Ghana cedi. You know, remember, nothing is lost in there. The proceed is still, you know, in USD, but because of accounting, we have to convert the, you know, the USD into Ghana cedi in order to prepare our books. So that is where, you know, that loss is coming from.
Okay, so that's one of the issues, the sticky points there, because that also contributed to the loss that we're talking about now. This 15.6 billion.
Exactly.
Okay, because then, just maybe for the understanding and of those who are watching us, I think you normally will use the Bloomberg rate, correct?
Yes.
So if say the rate on the Bloomberg is at the time, an ounce of gold is, say, you can give me maybe 4,000.
Yeah.
When you buy it at the prevailing
gold market rate, if the dollar to the cedi is, say, 12 cedis, 50 pesos, when you bring it to the Bank of Ghana, when you are selling it, you come to the Bank of Ghana rate, which is lower, than the market rate. Yes.
Then the forex differentials leads to a loss.
Yes. So that's another dimension to the rate gap. So remember, you know, in 2025, the cedi appreciated about 41%. Okay. So just imagine that you go to the market to buy gold, you know, at a certain rate. For instance, let's say at a rate of 11. Okay, at a rate of 11. Now, by the time you take that gold, you know, to the international market to sell, you know, to the international market to sell, and by the time you get a process to convert that process into cedi, now the exchange rate start appreciating. So that appreciation widens the gap.
Yes.
You see, that appreciation widening the gaps. So at the time of purchasing, assuming at the time of purchasing the gold, the interbank market or the BOG rate is at, assuming 11, and then the rate prevailing in that market is at 12.
Yes.
But at the time of conversion, the cedi appreciated, and then the rate is now 10. Now you have, you know, 2 cedis gap to deal with.
True.
So that 2 cedi gap is what translates into the loss.
So the appreciation of the cedi also caused the loss.
Yes, exactly. And also remember, in 2025, we have actually scaled up, you know, the gold purchase. So that's another dimension to this. So 2024, we did 56 tons in total, and in 2025, we did 111 tons of gold.
I was coming to that.
So you realize that also amplify the cost of the program. I always want to refer to it as the cost of the program, not a loss at that stage, because that is the cost of we getting the USD and the cost of stability. I'm sure my colleague will talk about how those flows are used to stabilize the currency.
Because I'm looking at 2025, and you talk about the scale up, because from 56 tons in 2024, we're talking about 111 tons in 2025, valued at 11.4 billion Ghana cedis.
Yes.
The net program cost was 9.1 billion.
That's correct.
But the total program cost was 21 billion.
That's correct.
How do you explain that to the person who's watching us?
Yes. So yes, it is true. The net cost or the net loss is 9.1 billion Ghana cedi, and that is reflected in our statement. However, the total gross cost of the program is about 21 billion. Now, remember, this program is it's not only for Bank of Ghana, right? This program is a quasi-fiscal activity, right? So what happened is when the total cost of 21 billion was incurred, right, the fiscal authority stepped in that, hey, we have also benefited from this debt reduction from 61% to 45% of GDP. So there's a need for us to do something. So in that sense, the burden for the cost was shared, and the fiscal authorities actually, supported the program with about 5 billion Ghana cedi.
I see.
Yes. Now, so that brought the total cost to 16, billion, from 21 to, 16 billion, Ghana cedi. Now, our transaction, the gold price went up, and then there was, a revaluation effect, revaluation gain effect. So that about 8 billion. So that brought the total net loss to the bank to 9.1 billion. So when you take off the 8 billion, from the 16 point something billion, you are arriving at, from 60 point something billion, and then you take 7.9 billion out of it, you are arriving at about 9.1 billion Ghana cedi. So that is why on our statement, you see a 9.1 billion cedis in our audited financial statement.
That is the cost to the program.
Yeah, that is a cost to from the Bank of Ghana's perspective. Yeah, remember, over the years, we've done this.
Yeah.
2024, the cost that you see 5.7, it's also a net cost. The previous year, it's also
that's why I ran through the previous
cost.
years before
Exactly.
2025.
Exactly. So the net cost to the bank, the cost that the bank, is carrying is the 9.1 billion, Ghana cedi. And of course, we all, saw what happened in 2025, and we are all witnesses to, the economic stability we are enjoying, the currency stability we are enjoying. Definitely, there's a cost to it. Now, assuming you go to the capital market to get the $10 billion, Alfred, how much will you be paying for that as cost?
I haven't actually gone to change 10 billion before.
Yes.
$10 billion.
No, so you can use the proxy, right? In the past, when we went to the capital market, Eurobond, you can check how much cost of borrowing we'll be paying on that. So I think this is a novel program, and it has served us very well.
So what I hear is you're looking at the trade-off, so that even though there's a cost, you're looking at the benefits that come with it. But then again, there's been proposals for the central bank to look at if you're going to continue this program, which clearly, from what you have said, is a program worth continuing, taking into consideration the benefit that is brought to the economy. Possible amendments or change to, especially the pricing, so that if you're buying it at the open market for a higher price, but then again, because there's a policy at the central bank to sell it at the interbank, which is lower than the open market rate, there will definitely be that loss. The forex differentials which will lead to this loss that we're talking about. Are you considering a possible review of that policy or a change of that policy? Gerson, you want to come in?
Yeah, thank you very much, Alfred. I think you are still coming back to the rate gap issue, which is very critical. You remember some time ago, the former Minister of Finance, was it Mr. Osafo Mafo, paid a visit to the UAE and then observed that the numbers they report for Ghana as gold imports from Ghana were significantly very, very high compared to what we record in our balance of payment account.
True. Yes.
What do you really think account for that difference? It simply tells you that there are a lot of flows out there. Being smuggled. And so the issue of smuggling in the gold market is very critical, and it's a factor in the differential in the exchange rate that we see. And one of those reasons, one of the key reasons why Gold Board came in is to ensure that Ghana buys the gold and not the smugglers from the artisanal mine. Ghana gets to sell the gold, not those guys. And then once Ghana buys and Ghana sells, the proceeds are bound to come to the Bank of Ghana. And that is exactly what we see. But in the process of buying that gold, the rate prevailing in the market is actually cedis, but the price is set globally.
Yes.
So to buy it, you have to convert it at an exchange rate to get a cedi. And in that market, it is the Forex Bureau rate which is applicable.
Yes, which results in the Forex differentials, which is a loss to us.
Exactly. So when that gold is sold and recorded in the nostrils of the Bank of Ghana, accounting practices and standards require that the central bank record those things in cedis. And the rate, central bank cannot apply any other rate other than its own rate. The reference rate, which is the interbank rate. Those create differentials. The gold is purchased at Forex Bureau rate and is recorded in the books of the central bank using the official exchange rate. And these are the key reasons that explains the differentials. And it is explaining about 83% of the loss we are talking about here. So the exchange rate differential is very critical. And you will remember.
So this is 83% of the 15.6 billion
of the
domestic gold purchase program.
Yes.
That's the 9.1 billion.
Yes.
Yeah. So we are speaking directly with respect to the domestic performance of the domestic gold purchase program, not the overall Bank of Ghana account. And so that differential between what the Forex Bureau rate is applied and what the reference rate the Bank of Ghana applies in these books is one of the differentials. And you know that at the end of every year, the assets on the books of the Bank of Ghana, be it the gold assets and even the currency, USD currency assets, are revalued at the end of the year. And when those rates are revalued, the currency appreciated in 2025 by about 41%. So take, for example, the currency at 2024 was 14.7, and we ended the year at 10.45. That gap tells you how much we have lost. So revaluation losses were very significant in terms of exchange rate. So two things are happening here. The differentials between the market, the Forex Bureau rate and the rates Bank of Ghana book those transactions in their books. And then at the end of the year, those assets that remain in the books of Bank of Ghana are revalued at the appreciated 10.45. That brings a very big difference between 14.7 and then 10.45.
Which means that what comes in is lower. Because then again, so as we are celebrating the appreciation of the cedi, it's actually impacting on you negatively.
Yeah, exactly.
Exactly. As everybody is reaping the benefits of that, the books, by the nature of the way the accounts are prepared at the central bank, transactions are recorded at its own reference rate, interbank rate, official exchange rate. That has to happen. Otherwise, we will have what we call multiple currency practices. And therefore, that creates a gap between the official rate and the application of the Forex Bureau rate. Those differences constitute 83% of the loss we are talking about.
I see. And so since we're even celebrating the cedi's rapid appreciation over the period, we are now getting to know the cost at which that appreciation came. And that is some of the interventions that you've had to, the hits you've had to take.
Exactly.
But I'm looking at these 4 cost components. The rate gap, which we've spent quite some time talking about, the off-take discount, the agent and assay fees, purity and refining loss. What's that?
Okay. Thank you, Alfred. Yes, so we spent time to talk about the rate gap. I'm sure you are okay with the off-take discount, right? So off-take discount, basically off-take discount, we sell the gold in its raw form, in Dory, okay, at the Accra International Airport. So therefore, we need to compensate the off-takers, by the incurring freight, insurance, refining charges. So now, for you to sell gold, you have to refine the gold to 95, 99% purity. But if you are selling gold in its Dory form, you have to compensate the one who is buying the gold at its Dory form.
In its raw form?
In its raw form.
Okay.
Besides that, we are selling the gold here in Ghana. So it means that the off-taker will have to incur freight, insurance to the refinery, right? So who bears that cost? So there must be a compensation for that.
I see.
So that is what we mean by off-take discount.
Okay.
Right. So yes, off-take discount has been one of the components of the total cost of the program, and it has been reduced over the years. Off-take discount per the industry practice is around 2%. But when we started the domestic gold purchase program, we have reduced it from that 2% to currently 1%.
1% of what?
So 1% of the price of the gold. So, so basically, if today the price of gold is $4,700 per ounce, we are talking about off-take discount of 1% of that price. Multiply that by the quantity of the gold.
And that is also itemized as a cost.
As a cost, yeah. But that cost is a very small cost.
What about the agent and assay fees?
Yes, so the assay fee...
Because this was captured in the IMF report, I remember.
Yes, so the assay fee basically is Gold Board services. Gold Board is the national, or PMMC or Gold Board is the national assayer, of the country. So every gold that is leaving this country has to be assayed by Gold Board, and they charge a fee for that. So that fee is what we call the assay fee. Basically, they check the purity level of the Dory gold and issue a certificate. With that certificate, you'll be able to sell that gold, abroad. So it's a service that they render to us, and then it has to be paid for. Now, there's a service cost there, or agent fee cost. So basically, Bank of Ghana doesn't go to the miners to buy gold. There must be somebody who will go there to buy the gold. Now, from the start of the program, PMMC has been the agents to go in there to buy the gold. Definitely, they will use their advance, they will use their securities, they will use their saying centers, buying centers. So, that is a fee. That fee has been 0.5%, over time. But now that fee has been 0 to about, that fee together with the assay fee has been 0 to 0.35%. So in the past, that fee has been, that fee plus assay fee has been 0.5%, but now it has been 0.35%. In 2025, when we scale up, we realized that the cost went up. So we took steps in order to, reduce, some of this cost. We took steps to even renegotiate some of the offtake agreements in order to, reduce the cost. Yes, so basically those are the interventions that was done.
How does the stabilization of the cedi also impact on this cost we're talking about? This cost build-up?
Yes, so the stabilization of the cedi, helps narrow the gap. So that you see that the stabilization of the cedi works around the rate gap that we just discussed, right? In the past, the rate gap has been between 1 cedi to close to 2 cedis, right? But now we are seeing about 60 pesos to 80 pesos rate gap. So the stability of the cedi has worked, in favor of the rate gap.
I see, because the concerns about the increasing cost saw a certain response from the central bank, which you just outlined regarding the reduced unit fees, the renegotiated commercial terms,
Yes.
and then also the contract structure, which is very, very important, because these are some of the issues that came up about whether there has to be some review in the contract structure after. It
has been done.
It has been done.
It has been done.
How did you do it?
Yes,
just give me details of what
yes, so as I've mentioned, in terms of the offtake contract, right? Yes, so the offtake contract, the pricing has been reduced drastically. So as I've mentioned, in the past it used to be, 2%. Now we have negotiated it down to 1%. So that's a significant reduction. And not only that, assay fee has been reduced, service fee has been reduced. But the purity loss, I've not touched on the purity loss. You see, the purity loss arise as a result of, using different assay methods. In Ghana here, we don't have fire assay method. Gold Board uses SRF and then water density method. But when it gets to when the gold gets to the final destination, they use what we call, fire assay. Now, per industry standard, when you use two different, assay method, you need to allow about 0.5% variation, right? So that causes the purity differential. So that is a cost. Yeah. Until we start using the fire assay, I think Gold Board has now put in place something to start fire assay. Now, I'm sure when we start fire assay, it means that the purity loss will be a thing of the past.
I see. It's important that we actually get into the details of the specific cost components, and what the review or the policy review position of the Bank of Ghana will be going forward. Because clearly, if we're selling gold at a discounted price, for the lack of a better expression, to account for the offtake, that's what's happening.
Yeah.
And freight and others, right? But we are buying the gold from the miners at the international spot price without any discount. Then obviously there has to be some thinking going forward about what has to be done differently to address this cost element.
Exactly.
That's one to consider, is it not?
Exactly.
Okay. Yeah. Yes,
so exactly. So like Paul explained, going forward, the key contributor of this loss has to be the rate gap.
True.
And
which is the biggest out of the four.
Exactly. And we from our analysis, we see that what happened in 2025 is a correction in the exchange rate. We say correction because if you look at the previous 3 years' performance of the exchange rate, in 2022, the exchange rate depreciated about 30%.
True.
In 2023, about 28%. In 2024, about 19%. That cumulatively is about 77% cumulative depreciation. So what we saw in 2025, which is about 41% appreciation, kind of correction that we observe. And many of our counterparties also confirmed that. The IMF is of the view that this is what we call a mean reversion. And we also see that think tanks like Goldman Sachs and the rest also came out with studies to show that our currency is not overvalued at all. So what happened may be described as correction. And so going forward, we expect the currencies to be stable. And once that currency is stable, from 10.5, we don't expect that sharp appreciation we see. And therefore, issues from revaluation, significant revaluation losses that we saw may not be there. And normally, when currencies are stable, you will see that the gap between the Forex Bureau and the official exchange rates are also very narrow. And so a case in point is if you take 2025, you see the year ended at 10.45 for the official rate, and the bureau is about 12.04, which is 1 cedi 60 pesos. It's very significant. But as we speak as we speak to you now, it's reduced to about 60%. That's the spread between what you see in the official exchange rate and then what is at the bureau. They are all around 11.2 and 11.85. That spread is now about 60%.
Has been narrowed, because that was one of the big issues, that why is the Bank of Ghana rate so low, but then when we go to the forex, the rate is so high. So at some point you were quoting 10.2, the forex was quoting about 11.46, 11 cedis 46 pesos thereabout, and you were doing 10 cedi 40 pesos thereabout at some point. And so then the question was what exactly went into those kinds of, but having explained this, at least there's an understanding to it. Sometime earlier in the year, the governor of the central bank, I'm talking about your boss, essentially, he gave a clear indication of who bears the cost of this program going forward, so that taking into consideration how important this domestic gold purchase program is and how that has influenced the economic development that we're seeing, or the kind of stability that we've seen over the last 16 months, then the Bank of Ghana should not be bearing the cost alone. What are we going to see going forward?
Yes, so I'm happy you are talking about the cost sharing, and I'm happy you've heard about the GAMRA program, so which was passed by Parliament, approved by Cabinet. So basically, the GAMRA program is to build a strategic economic war chest that is external buffer sufficient enough to absorb shocks, without necessarily a recourse to emergency borrowing. Currently, our import cover, it's around 5.8, right? But we want to, go beyond that to do about 15 within 3 years' time. Okay. Now, what it means is, Gold Board will have to take up certain responsibility. Bank of Ghana will have to take up certain responsibility, and the Ministry of Finance will have to take certain responsibility. And this is a quasi-fiscal activity. So therefore, the cost to the program will have to be burden share. And there are ongoing discussions in order to, agree on, which proportion will Bank of Ghana bear and which proportion will the Ministry of Finance bear. So going forward, we don't expect, the Bank of Ghana to absorb all the costs.
As we are seeing now.
As we are seeing now.
So going forward, the cost of this gold purchase program, domestic gold purchase program, will be spread across 3 institutions.
Yes.
That's Gold Board, Bank of Ghana, Finance Ministry.
That's correct.
Yes, so that's very correct. A lot of reforms have happened. Alfred, there was no template, and as you go, you correct. And that's reverberated in the boardrooms of all these 3 institutions. And so the major argument has been where this cost sits. And everybody is of the view that once the quasi-fiscal activity, Gold Board takes responsibility for these activities. And so BOG is no longer in the pre-financing arrangement. And as we speak now, Gold Board has made a lot of improvement in that direction. Government itself has given them close to about 5 billion. And they, on their own, have been able to arrange a lot of pre-financing arrangements. The numbers we saw recently shows that they've been able to get over $850 million. And that, together with what they get from government, will be able to sustain them in their operations. Probably what they may need may be some bridging facilities to bridge the gap between when the cash flows are not coming quickly, the timing difference between when they are selling and all that. So a lot has really happened in terms of transformation and reformation of this program.
I see. With the collaboration that Gold Board is having with this local refining company, how is that going to impact on the purity and refining loss in that cost component?
Yes. So the collaboration Gold Board is having with the 2 refineries we have, the 2 major refineries we have in Ghana. So which means that I talk about, fire assay method. The main reason for the purity loss is because we are not using the fire assay method.
Okay.
We are using SRF, and then, the destination country is using the fire assay method. Now, if we start to use fire assay method, and it means that we will have to pay the miners based on that fire assay method.
Okay.
Which means that when the gold leaves this country, we will not have any major or main differential between these two assay methods. Remember, the purity loss arise as a result of using two different assay methods. If you use fire assay and the other party uses a fire assay, the chances that the differential will be 0.05%.
Okay.
Plus and minus. So this collaboration, is a good one, and then we expect that this collaboration will minimize or even reduce drastically the purity loss components of the total cost of the program.
I see, and this is key point. It's 8 o'clock. We're going to go for this quick break. When we're back, my guests will join the conversation, as I did indicate earlier. Professor Ebo Texin is joining us virtually. Joe Jackson is with us in the studio. Would also be having Honorable John Dakon also join us, and Professor Khalid would also be joining us. And then Alfred Appiah is a data scientist, also going to be joining us. We'll have a conversation flowing from what we've heard from the central bank and regarding the details of this cost component that we're talking about, and then also the reforms going forward, because clearly what has been confirmed is that this cost associated with the domestic gold purchase program will not be borne by the Bank of Ghana alone going forward. That is going to be shared amongst three institutions. We saw, and maybe quickly before we go for that quick break, we saw the gold reserves reduce in the last quarter of 2025, and I'm going to put that trend on the screen because I referenced it before we started this conversation, and the last 45 minutes or so, we've been focused on the domestic gold purchase program, which is one of two issues we're going to be talking about that influences the expenditure or the loss that we're talking about this morning, the 15.6 billion. It's the open market operations, and then there's 9.1 billion we're talking about associated with this whole domestic gold purchase program. What exactly led to the decision to sell some of our gold in our reserves in the last quarter of 2025?
Okay, Alfred. So as part of our reserve management strategy and framework, three key objectives guides our operations. The first has to do with safety. Safety of the reserve, which involves capital preservation, make sure you don't lose money. And that also involves that you have to diversify as and when necessary to mitigate any loss that will arise from those. The other objectives has to do with liquidity and then some return enhancement. Along the year, because of the rapid growth in the gold stock, in the reserves, mind you, the whole of the reserve is not gold stock. The gold stock, the gold stock in the reserve composition has risen sharply over 42%. And so we have a lot of interest from all the institutional investors and the rest trying to sell to us products, hedging products, all in an attempt to mitigate the overexposure, concentration risk coming from the overexposure of that. So that means that if something happened to gold price, the country is going to suffer significantly because of that exposure. So the board and all the management have taken that decision up, and something has to be done to reduce the over-concentration of that gold in the reserve composition.
Right.
Yes, exactly. That is what we did. And when you look at the World Gold Council, the statistics and the numbers shows that almost everybody, the maximum you will see is about 20%. That means that the bullion, the stock of the bullion in your reserve composition should not exceed 20%. And anytime it exceeds that number, you are overexposed. That concentration risk has to be addressed. And so somewhere around August, September, those discussions were happening. And around October, the board has taken a decision that as a gold producer, we haven't stopped producing gold. The stock will continue to grow. So let's do that one-time diversification. where we reduce the stock of the gold to 20%, and then as we produce, so that we are not overexposed to that concentration risk of the gold. So that was what was done. So the stock of gold, as you see, reduced. But the proceeds that we get, the forest that we get, is still in the reserves and is invested. It's invested and is still earning profit. It's the reason why you see that even though that gold was sold, the reserve position did not change, because it is just a movement from one asset class to another. We move from bullion into cash, forest USD, which we invest to procure. So it's pure reserve management strategy. It was a diversification strategy to mitigate the concentration lost in the reserve composition that we have at the time.
Gerson Agbajowu is head of Financial Markets Department at the Bank of Ghana. Paul Blebo is head of the Gold Desk Finance and Market Department. We'll be back shortly after this quick break. Joe Jackson and all my other guests will join us. We continue the conversation, touch on this matter, and then also the open market operation. Stay with us. We'll be back shortly.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abnanya Kwasmeni, coming soon on TV3.
TV3, first in news.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abnanya Kwasmeni, coming soon on TV3.
TV3, first in news.
Come back to Key Point on TV3. We're live on 2.7, also on TV3 Ghana on Facebook and on DSTV channel 279. We're all across the world on 3news.com, also on the Voice of London radio in the heart of the city of London and Voice of London television as well. It's proudly brought to you by GASEM, the nation builder, and also the Bank of Africa. Now, activate your dormant account with the Bank of Africa. Enjoy our refreshed products and services, including our enhanced SME support facility, the US dollar debit card, credit card, and more. You may also update your account at any Bank of Africa branch with your Ghana card. Kindly reach our call center on 0302 429 333, 0302 429 333, or 0302 249 690, or chat Fafa at www.boaghana.com for support or enquiries. Bank of Africa, as strong as a group, as close as a partner. And we're live on YouTube. That's on YouTube, TV3 Ghana on YouTube this morning. So a number of you also giving us that information and feedback. My guests already taking their seat, but the first part of this conversation this morning, I'm going to introduce them in a bit, focused on the two major components that contributed to this particular loss of over 15.6 billion on the Bank of Ghana's books at the end of the financial year 2025. That is the open market operations and also the domestic gold purchase program, which is 9.1 billion, as was explained, and what resulted in that, and then what is going to be done going forward. So now, that cost, from what we're hearing, is not going to be sitting on the Bank of Ghana's books alone. That cost, from the understanding we're getting now, will be shared across 3 institutions. So we'll look at that. The cost of this economic decision that has led to this stability is what we're looking at. Is it a cost worth bearing or a cost too huge to bear? But this is the picture. We're going to put that on the screen right now. With the economic indicators that we saw, the macroeconomic indicators trending all towards the right direction, this was the result of it, or this is the cost we're having to bear. Now, if you look at the trajectory in terms of the Bank of Ghana's profit and loss position, and consistently the bank has referenced us to the fact that they are not a profit-making institution. And then again, we looked at this because it gives us an indication of how the trend has been. We'll put that on the screen, so you've got to have a clear view of it. From 2015 up until 2025, this 10-year period is what we looked at. From 2015, posted a profit of a little over $1 billion, and then it reduced a bit to a little over 710 million in 2016. Then in 2017, within this 10-year period under review, that was the first time we saw a loss of some 1.64 billion. Then fast forward to 2018, it recorded a loss again of some 790 million over. 2019 returned to profitability, continued to 2022, that highlight year where we saw the over 60 billion loss that was posted on the central bank's books. That record, or the trajectory of the loss on the central bank's books, continued up until the year 2025, which has been published now, which we are looking at now. That is some 15.6 billion. But this, we are saying, actually has some components to it. It clearly gives us an idea of how the central bank's performance has been over the period. And fast forward to this open market operations, that is the second component of the cost that we're dealing with. So even though there was a loss on the gold deals, or that is the domestic gold purchase program of a little over 9 billion, which my first 2 guests have explained, this forms just one of 2 issues that we're having to deal with. That is regarding the open market operations as well that the Bank of Ghana engaged in. That we're talking about the Bank of Ghana's decision now to step into the market, mop up excess liquidity by essentially borrowing from the commercial banks. And this open market operation has also led to some losses that the bank has had to incur. And this open market operations, even though has resulted in some level of stability, we are also talking about the cost that has come as a result of this stability that we're dealing with. And so if you look at these indicators as of the end of 2025, the end of 2025, domestic debt, we're talking about the public debt as well, reduce, improve lending rates, cedi appreciation, fiscal debt. Is that a justification enough for this loss that we are seeing? Joining me in the studio is Honorable John Darko, is Member of Parliament for the Suame constituency. For many of you didn't know him as one person who has a strong finance background as well. You know him as the lawyer for the minority, a private legal practitioner, and also having a strong background in finance. Honorable John Darko, good morning. Thank you for joining us.
Thank you for having me.
Also joining us in the studio this morning is Professor Sharif Mahmood Khalid. He is an associate professor of accounting and finance and an economic advisor to the Vice President, Professor Nana Jane Opoku-Agyeman. Prof, good morning.
Good morning, Alfred.
Joe Jackson is a financial analyst, globally celebrated, and also the CEO of Daylex Finance. Mr. Jackson, good morning. Thank you for joining us.
Good morning. Good to be here.
Also, Martin Pebo is private legal practitioner, and he says he's the layman's voice on the matters of the economy, because in the end, it's all about how people feel, not so much about what people see.
Yes, yes. Good morning, Mr. Okanse. Good to be here. So I'm happy today we are back to this topic, because we keep asking that, but all this plenty analysis, the price of kinky is not coming down. So as long as the price of a ball of kinky is not coming down from 7 cedis, then all this plenty talk. Yes.
At least you don't have kinky crossing the street of Hamus.
That's an interesting one. That's an interesting one. Okay. Yeah, so good people of Ghana, thank you. Thank you. Once again, we are back on this show. Ghana's most popular, unstoppable, unshakable, unbreakable, and unbeatable. Thank you very much. Once again, we'll remind men above 40 to do the prostate check. A man above 40 is obligatory. You must. We don't want to lose you too early. We've lost too many people who didn't do the check earlier, and by the time they went in, doctors couldn't save them. So please, do yourself a favor by checking in very early, right? I will thank our valiant men, the men who stood up, of course, and a woman, when Akufo-Addo was maltreating us with his bad governance. So we are talking about Togbe Afede, Osiadeyo Agyeman Bedu the second, Gamanche Kintaki Tekuchu the second. Yeah, thank you very much.
But thank you very much.
And Sofe Kufu. I didn't mention Sofe Kufu. Yes.
Thank you very much. Also, Professor Ebo Texan is joining us on Zoom. Prof, if you could put your video on for me, that'll be good. Prof, good morning.
Good morning. Good morning to your viewers and my co-panelists in the studio.
Perfect. Kindly put your video on for me. That'll be good. Also, Alfred Appiah is a data scientist. Alfred is joining us on Zoom as well. Alfred, good morning.
Okay. Good morning, Alfred, and good morning to everyone.
Perfect. Thank you. Thank you so much for joining us this morning. And we start off from one of the two components that has contributed to this headline loss on the books of the central bank, this 15.6 billion. And this is it. This net loss on the gold deals, which I spent at least the last 50 minutes talking to the first two guests from the Bank of Ghana about it. There are four components that has contributed to this over 9 billion loss on the domestic gold purchase program. the rate gap. And this is a policy where they're going onto the open market to buy gold at the open market rate, which is normally pegged at the Bloomberg rate, which is higher. And then bring it to the central bank. They have a policy to now sell the gold at the prevailing central bank rate, which is in most cases lower than the open market rate. So there's a forex differential loss there, which actually forms a chunk. They say this is about 83% of this almost 9.1 billion that we're talking about in here. There's a consideration for a review, but first of listening to them, Mr. Jackson, how did this strike you? The details we got today.
Anyway, first of all, good morning to all your guests. Today is the deer hunting festival. As soon as I saw Martin, I remembered that today my people of Winneba will be in brilliant colors for the deer hunting festival. Listen, Alfred, the gold losses are problematic. They're problematic because the trading losses are really hard. Sometimes it's difficult for us to explain exactly. They've given us some categories, but there's still some problems. How do you go in and come out trading gold at a loss? And the only little comfort we have is that over the years, since it started, the component of trading losses has been dropping significantly. So at best, we can say they're getting more efficient at trading gold, right? At worst, we've got to fix these trading losses. And it's hard to understand and explain how you buy gold, go and sell gold, and by the time you finish, you are holding a loss. It just doesn't ring right. Something at the very basic level, it doesn't ring right.
But that's the detail we got today. Now, what's contributed to this?
All those details are details that make us even more uncomfortable.
Which is what?
Assaying differences. We should know before we enter the market that there are different methods. Gold trading didn't start today. Gold trading didn't start with my grandfather. Gold trading has been around. There's a method to the madness. The only thing is that when you look at everything in context, and it's important for us not to be diverted with any single issue. When you look at everything in context, the thing is that the central bank is not a bank like an APSA or an Access or even a Delex. It has a particular mandate. And that mandate includes stabilizing the cedi and making sure that prices are fair and stay within a stable limit and keeping our financial system stable. Now, in that context, when you look at the losses, I ask myself, in a country with a GDP of, $82 billion, give or take.
We are by 100.
Let's say 100. Would we accept less than 2% as the cost of keeping this country stable? And that's really the headline statistic. Then, for what we have been able to do to hold the value, retain some of the value of cedis in country, the value of our gold exports, for what we have been able to do to reduce smuggling, is this an acceptable loss? I would say it's on the borderline. It's on the borderline. We need more efficiency in gold trading. We need the and telling us that they will spread the losses does not actually address the question. Why are there so much? Why is there so much in losses? And that's the issue to be addressed. So on one hand, the losses have been coming down over the years. Well done. On the other hand, when you look at the big picture, the losses don't seem as bad as they could have been. But we must still get more efficient. And what we require is a commitment that these losses will be reduced significantly. Because when you take the losses as a proportion of the value of gold we bought, then you start getting really uncomfortable. That if it wasn't for the mandate that is different from a fully commercial operation, somebody would say, why are you buying and selling gold and making a loss? Then stop it, right? But there are other non-commercial considerations that matter. So what we heard didn't make us completely comfortable. But when we look at the big picture, I would say that the benefit to this country of the stability of the gold, of the currency appreciation, and all the other benefits we've got, at less than 2% of our GDP in general, we'll take it.
I see. And Professor Khalid, I'll bring you in on this. And taking into consideration the fact that this forex differential or the rate gap, as a result of what the policy that the Bank of Ghana implements in this domestic gold purchase program, contributes about 83% of this loss on the program. Now, what we heard today is that with the CD appreciating, then it means that there's going to be a smaller gap. It will then reduce the cost going forward. But that's a trade-off, is it not? Because if as the CD is appreciating, then we're having to...
It's a very complex perspective. I'm just recovering from being under the weather, so pardon my voice. And first of all, I think we are putting the context of this discussion under the gold trading, so I really want to focus that.
Yes, before we go to
other areas. Now, before I start off, I'm trying to wear my academic hat here and to look at the discussions that we've had over time. And for me, I want to commend the central bank, because I remember a few years ago when the central bank posted losses in the usage of moral suasion in determining all of this, we were being told that the losses amounted to nothing. But for the central bank to have a marching order to dispatch 3 of its key staff to come in studio to actually engage the public prudently on this, I think is worthy of commendation. And I think Dr. Esiama has done a fantastic job at that. Now, looking at this, I think that when you look at the gold trade and the losses that come with it, I do know that we've come from the hill of a big debate about taking it to the gold board first to say they were posting losses. You know, we had this debate all the way till we got into the central bank. Now, as you would know, and as you've put them up there, the gold program is divided into 2 categories, right? Where you have the gold for reserves and the gold for oil. Now, if you look at these things in terms of the beginning of the program, that was sometime last year, the quantum of gold that was being purchased and to what happened in the year just passed, or the financial year just passed, is probably more than double. And I see an aggressive, and this is where I think that the bank ought to look at this trading carefully. That's where I'm speaking from a professional point of view, because there's an aggressive leap of that in a very complex and gray area that we are trying to catch up. And obviously, if that happens, we would have some operational losses.
Yes.
And this will not be caused by anyone.
It increased from 56 tons in 2024 to 111 tons in 2025.
In 2020, yes. That is a very, a quantum leap in what has happened. And if you look at gold, which has the sensitive price mechanisms in terms of how it changes, you would have these things happening. And now, you look at this, time is of essence here. It plays a big role. Valuation plays a big role, and policy as well plays a big role. So these are a mix of things that can actually bring what we would call, or in professional parlance, operational loss, not just as a loss to say this is what happens. Remember that in doing so, we will still have to look at the core functionality of the central bank and the gold board in what they are trying to do. But the fundamental question to ask here is that, are we achieving the real impact? What are the results here? What are the central bank reserves? Positive. What is import cover? Positive. From moving from our 1.4 month of import cover to 5 plus, right, is the operationalization of this initiative that is leading to all of this, lending rate, etc. So if these are resulting in real impact, these are the gains that we're looking at, which may not be on the balance sheet of a central bank, but it's on the balance sheet of the economy and what people would feel. So when you look at these programs that come in, the real analysis is to contextualize what the impact of these are, what the causes of these are. Mind you, when we talk about even gold trading, and we are looking at the three key variables that I mentioned, which are the valuation, the timing, and the policy driven. You have central banks, like let's say probably gold for reserve. Let's take that as an example. You buy gold as a central bank to play with the gold for reserve program. What happens is that within the shortest possible time, you're selling it to the market. Right. Now, you're selling the market at a prevailing rate. So whatever happens at the market, you're subjected to the risk and the vagaries of the market. And that could come or hit back to the books of the central bank as an operational loss based on the trade that would have happened at that particular point in time or the photographic moment. And how that is captured and treated is what we are discussing today. Now, again, Alfred, even if you look at this in terms of timing, even if the gold, right, within the central bank is not sold, market-to-market accounting can still incur losses. So it tells you how sensitive gold trading is. So I think that we ought to discuss this from a very dispassionate, apolitical point of view and look at how, for me, from the heels of where we've come from, where we were trading gold and the price of the cost of gold was as equivalent as what we were doing and to what we are getting now, I think it's a significant improvement by the central bank. And I think we need to improve upon that. There is room for improvement, but this is not something I think we ought to split heads about, because I don't see the whole discussion and the political dimension we're bringing to it, it's a bit interesting. It's like what is happening now is like a child is made a mess, is poo-pooed, and an elder is stepped in to clean up the mess. The mess is bad. It's that bad that in doing so, you pick up a few of the poo. And then the child now follows you crying, saying that you've made a big poo. How do you contextualize these analyses? Let's look at the real impact of these programs. For me, fundamentally, that's where I think we should come from. And you would realize even that even with the European Central Bank, there were losses in such similar measures to what has happened. More so, you look at what had happened in the past. I mean, within the context of this discussion, no one is even talking about Israel, America, Iran, whatsoever.
No, how does that play
No, I'm just saying, but I mean, back in the day when we were talking about central bank losses, what have you.
No, but that started from 2026.
Yes.
We were looking at 2025, so
yes.
that doesn't come in anyway.
No, how does that not come in?
No, I'm talking the Israel-Iran U.S. war?
No. I'm not thinking within that context. I'm just saying in general with the economy, when we are discussing it, right, these are things that people bring in. Okay, but let's move on to the contextualization of what we're talking about, which is the gold trade. Because I veered off to say that this is
so that's why I wanted us to come back to
this is what the real impact of the economy is. So I think that, yes, so if you look at these things, central bank has done well. We need to pat them at the back in terms of what they are doing. So it's a very complex business. Very gray area to delve in. Right,
but the complexity of it, obviously, was known, to some extent before we got into the area. That's why I bring in Mr. John Darkom. So the focus now being directed to is this. These gains, the macroeconomic indicators all trending towards the right direction, and much of it as well being as a result of the proceeds from this domestic gold purchase program being injected into the economy to show up the value of the city. And now we're hearing that this loss as a result of the program, right, which pushed this debt, this one, would not sit on the books of the central bank alone again going forward. This loss will be shared amongst 3 institutions because the central bank says, look, I cannot carry this alone. So Gold Board, Finance Ministry will all come in they'll find a formula to share this loss going forward.
Yeah, but they are praising the debt. They are saying that the debt has helped them. So why are they now saying that it's not going to sit in their books any longer? We are here, we are celebrating debt right now. That is what we are doing as a country.
John, are we celebrating
We are celebrating that. You are telling us that as a result of the debt.
No, not the debt.
You see, Prof, when we were speaking, I did not intervene.
Okay.
We are here. You are celebrating debt.
All right, go ahead.
That as a result of the debt that the BOG has incurred, you have all these numbers. You are telling us that the cedi has appreciated. You are telling us that the interest rate has come down. So you are celebrating the debt. And this is a government that, before he assumed power, actually attacked the previous government for incurring less loss. And so you see, we've always maintained that our brothers in the NDC, they've lost the plot. They have completely lost it. And their inconsistency has become clear. Is it not the same finance minister when he was the minority leader, accusing Akufo-Addo of printing money to fund his lifestyle? He said he's printing money to fund his campaign lifestyle on a petroleum budget. At the time, what was the negative equity? The negative equity at the time was 55 billion. The NDC said the NPP had committed such an economic crime that they had to be moved out. Now, what is the negative equity here? 93 billion Ghana cedis. And so, I don't know how anybody can justify this debt that the BOG is incurring. And you are telling us that, because you are buying gold. You buy gold and sell at a loss. This is the only government that buys gold, sell at a loss, and still want to be celebrated. Okay? In the previous administration, 2023, the BOG loss was 13 billion. 2024 was 9 billion. Now it is 15.6 billion, and you want us to celebrate you. How do we celebrate that? In fact, during the Akufo-Addo's government, that was a crisis period. We had COVID, we had the banking crisis, there was debt crisis. Yes, NPP fixed all these crises before it left power. Then you come back, you assume power, you have a lot of gold, about 18 tons of gold. You sell all of that and still make loss, and want us to celebrate you. So for me, I think that we need to go to the people of Ghana and ask them, have your lifestyles, have your life been improved as a result of the debt that this government is accumulating on BOG?
Has there been an improvement?
No.
There hasn't been any improvement.
There hasn't been an improvement.
You haven't seen any improvement in the economy?
As I sit here, I haven't seen pay increases. As I sit here, I know that cost of living is high. Maybe my brothers here...
Your cost of living is high.
My brother Khalid is in government, so he has a lot of money.
Are you speaking generally or for yourself?
Yes, myself and my constituent. Go to my constituency, go to Swami and ask them whether their lives have improved in the last 16 months. They've been suffering no jobs. For the teachers who are asking for clearance, they are not being given jobs. Their lives haven't been improved.
So their cost of living is high?
Their cost of living is high. So
in your constituency?
Yes. And in my lifestyle, I know
in your
cost of living is haven't we seen increase in petrol prices? This is the government that is celebrating debt. Instead of because the debt of BOG is now 15 billion, they have done well. How do we justify this? How do you sell gold at a loss? Before you came to power, the government, the Akufo-Addo government, had over 30 tons of gold. Okay? You came to sell. And that's the only reason why even this debt is what it is right now.
Do you know the program cost or the loss on this domestic gold purchase actually started from 2024? Based on the records, even before.
Before that.
So that's. I just wanted to put it right so that you will see.
But I mentioned. Look, why are you pretending? I mentioned that 2023
the loss started from.
No, I said 2023 there was 13 billion, and I said 2024 it was 9 billion. 9 billion. And 9 billion cedis.
Oh, you're talking about that. You are talking about the general
loss.
Yes.
So are you celebrating that now, or you?
Yours is 15 billion.
Are you celebrating?
Yours is 15 billion.
Are you celebrating it?
You understand?
Wait.
Yours is 15 billion, and you want us to celebrate you for that.
Are you celebrating what you mentioned?
In any case,
what you are mentioning is the total operational loss of the Bank of Ghana. I'm talking specifically to the gold purchase program. The gold purchase program.
Let's put everything in perspective. You see?
No, because it's a graduated conversation.
The BOG,
that's what it started with.
The BOG debt, yeah, we can put all the other components.
Yeah.
But I'm saying that when it comes to the gold, okay, that is where you want to concentrate. I'm saying that nobody sells gold at a loss. This is the only government that is selling our gold
That's what I'm saying. These losses we're talking about.
That's not true. That's not true. John, let's not mislead the public. No. Technically, how? With the kind of trading the BOG is doing. And
hold on.
God losses not long ago.
Oh.
And what I even
are we not discussing the NDC's?
No, within accounting perspective and the kind of trading that goes on, whether you even sell or not, you can still have accounting losses. That's what I'm saying.
When you are touching, I don't
go.
But anytime
we educate the public as well.
Yeah. That's why I'm asking the specific questions that you are. So if you make that statement, I'm querying that statement because of the fact of the situation.
Is that this whole BOG debt? I mean, the gold component is just one of them. I'm saying that this government should not be celebrating it. In fact, the lives of the people of Ghana haven't been improved. That is a fact. For me, as a politician, when I go to my constituency, they want to see real life improvement. When they go to the hospital, they want to see consumables. They don't want to go to the hospital and they'll tell them that we don't have this medication, we don't have these vaccines. They want to see that how our lives being improved as a result of the debt being accumulated. So for me, I don't think that this so-called profit, now you put on your screen that there's 40%
these are the indicators,
in terms of the CD appreciation, right?
Yes.
The CD has appreciated. How has that impacted my life?
The CD appreciation hasn't impacted on your life in any way.
It's good on paper. It's good on paper. Fuel prices are up, isn't it? Is fuel price not up in this country? Don't we have electricity prices going up? How is this improving my life? That's the point I'm making. So you put this one here, you want us to celebrate the entities because as a result of their debt, you are putting these figures for us to look at it. But for a Ghanaian, you are looking at how your life will be improved. And as we sit here, I don't see the improvement. I don't see all these benefiting me as a Ghanaian. When I go to my constituency, these things don't mean anything to them.
I see. Mr. Jackson, you want to say the indicators and improvements are not seen anywhere?
I just want to throw in.
No, you come in and then I'll... Yes.
Okay. Now, I think for us to sit here and say that absolutely no improvement is unfair. And then we are reducing this to the same old partisan discussion that really turns off the masses of Ghanaians. Let's address the fact that our central bank has lost money. Let's address that issue. Let's see what can we offer to that discussion to improve it. Let's not descend to there's no improvement in. Listen, fuel prices came down before they started rising again. PYRC, but they came down first. PYRC dropped prices and prices will rise again. But but let's be clear. Let's be clear. Don't let us write off what happened in 2025.
You also have to look at what the NDC said when they were in opposition about the same thing.
But look at it.
Run away from it.
But look at it this way.
If I was in opposition,
look at it this way. Let me come again. Take my average Ghanaian, right? At the end of 2024, if I was paid 1,400 cedis a month, I could go out and do $100 worth of shopping. At the end of 2025, if I was paid 1,400 cedis a month, I could now go out and do anything up to $130 worth of shopping. That can't be. You see, that can't be. That makes a difference.
A big one.
That makes a difference.
Our cost. So that's the cost they are telling us. Our cost.
Exactly. So what we should. But this is the cost of it, and so the argument can only be that: is this cost worth it? You cannot be arguing that I haven't received any improvement. The discussion can be about we have had some improvement, but at what cost? Then we can have a healthy debate to say this cost is not worth it. This cost is worth it. But when you break down the argument to I've seen no improvement, nothing has happened, then the argument becomes...
You see, Prof, that's the thing.
I'm not a prof. GTech will come after me.
Thank you. We are doing a lot of paper policy.
I'm going to come back to you.
I just want to throw in these figures.
I'm talking about real life situation.
That may help with that.
When you say 40% CD appreciation, how does that improve the life of the Ghanaian?
Alfred, Alfred, what we're saying here is where we contextualize this. And the functionality, we're doing it within the context of the functionality of the central bank and what else. Let's look at inflation alone. Inflation dropped from 5.4%. It dropped to 5.4% in 2025 from 23.8% in 2024. Cedi strengthened by an average rate of 40% against the dollar in 2025. We have public debt reduction of 61.8%. to 45.3%.
You go to market.
So you look at all of this.
Reserves.
Okay. I'm coming out. You look at the central bank reserves.
Honorable John, I'll come to you.
1 billion in 2004 to 18.8 billion in 2005. We're talking about 5.7 months of import cover compared to where we came from at the heel of 2003, which was 1.4. So if you're looking at these gains, significant gains, and you can't make a comparison to what is happening within operational losses, then that is problematic. But the cliche of just trying to, that nobody trades in gold and get a loss, it's so vanilla and basic that it doesn't work that way within the functionality of what the central bank.
Your microphone is actually off.
So this is the positive gains of the Mahama Opoku-Agyeman forcing economy.
Okay,
and you have to look at it from that perspective.
I'm happy now you are talking as a politician because
let me bring in
Professor
I'm still speaking from the policy perspective.
You said you're going to put your microphones are off. You have never put any
your microphones are off.
Everything you've been doing is politics. Can you hear me? Let's accept that.
Hello, Prof. Can you hear me?
Yeah, Mr. Council, I can hear you.
Perfect. Thank you. Now, listening to the path that this conversation has taken, and I reference what the central bank officials told us and the details as to the forex differentials that forms a chunk of this, the cost of the domestic gold purchase program. They don't look at it as a loss, but a cost to the program, and what they intend to do going forward to address the impact of the cost of the program on the general management of the economy and then the program itself. I want to find out from you whether this program was actually worth it and how much impact it has made. Is this worth pursuing, taking into consideration the gains we've seen?
Thank you, Alfred. I think that when it comes to the central bank and these issues that come from the conduct of monetary policy and also financial stability, we have to do this discussion devoid of politics. The Bank of Ghana remain the Bank of Ghana, no matter which government is in power, and the expertise there, who I always say the Bank of Ghana, the central bank is like the fire service. They don't cause any problems, but their mandate that is given to them is to go and ensure that prices are stable, ensure financial stability, ensure the exchange rate is stable, ensure that the balance of payment position is sustainable. These are clear policy mandates of the central bank, as if the central bank is going to clear mess. So the central bank is always fighting crisis in the economy. And irrespective of the government in power, the issues that confront the Ghanaian economy will not change. And therefore, what the central bank does won't change. And therefore, when it gets to a point where we are discussing issues like that, I would ask the politicians to let us discuss these things devoid of politics. The issues that confronted the central bank since 2022, when Ghana went through crisis, and the policy options that the central bank took then, and the negative equity and the losses then, are still relevant today as we speak. So why should we be fighting about these issues when we need to discuss what we need to do as a country to change the structure of our economy to ensure that these losses that we see on the books of the central bank doesn't pop up again? I must also indicate that we need to see the central bank's role as a pure public good. When a government builds a road, let's take the N1 which was built. The government didn't tow the road. There was a lot of money that was invested in that public good for us to be able to move about to conduct economic activities, which indirectly was going to benefit the economy. The central bank's monetary policy role is a public good. So when it comes to assessing what the central bank has done, our focus should be on, did the central bank achieve its mandate? What were the benefits of the achievement of the mandate? And compare that to the cost. And trust me, when you compare that to the cost that we are discussing in the studio now is insignificant relative to the benefit of what the central bank has done during a crisis management and at this time as the economy tries to stabilize. And we need to be very clear on that. The cost and the losses that you are discussing is something that is normal with central bank activities. A central bank that is fighting inflation will go onto the market to mop up the excess liquidity. The monies that are taken off the market and stored at the central bank is compensated for. They are people's money, and the central bank will pay an interest on those bills that it uses to mop up the liquidity. That is going to come at an interest cost to the country. But the question is that it's a lower inflation. The benefits of a lower inflation, does it outweigh the cost of the homogenization? It's a question that we need to ask. Because when inflation is high, the negative impact it has on the economy is not the 9.7 billion that you are talking about. Huge benefits to the economy. Look at the way we've brought down inflation from 54% over the last 4 years to 3.2%. It's something that is very remarkable, and we need to celebrate it. I'm not saying that we shouldn't discuss the cost. I'm saying that it should be devoid of politics. Homogenization will take place by any central bank insofar as inflation is high and there is liquidity in the system that has to be mopped up. It has no party colors, and therefore the interest cost will go and sit on the balance sheet of the income statement of the central bank. That is the first point. 2, if you look at where we've come from with this domestic gold purchase program and the various monetary policy options that the central bank took over the years, you will see that because it's a public good, there's a cost that is incurred to sustain these gains that we are making. Don't forget that we are coming from crisis, and we needed to get out of crisis, recover the economy, stabilize the economy to build the resilience that we need so that we can withstand especially the external shocks that come into our country, which we have no control over. And to stabilize the economy had to come at a cost. So the domestic gold purchase program that was thought through at that time in 2023 was meant to see how best we could use cities to buy gold, preserve some as our reserves, and use some for what we call forex intermediation, so that the demand for forex in the economy to bring in oil and other imports was going to be minimized, so that the pressure that was coming from the demand side would curtail, so that Ghana could relatively stabilize its currency. Look, this cedi stabilization that we saw, especially with appreciation of 41%, was a corrective measure. Between 2022 and 2025, beginning of 2025, our currency had depreciated over 70% cumulatively. And if we are going to stabilize, it had to correct, and the correction was going to come with an appreciation. And once the appreciation happened, the central bank was going to suffer revaluation losses on its books. Because the central bank held, let's say, an asset, let me use this as an example, an asset of $1 billion in dollars. And you put it in the central bank's book. And at that time, when the dollar was 15 cedis to $1, it meant that in the central bank's book, that $1 billion investment was 15 billion at that time. If the city appreciates and becomes stable at 10, that 15 billion on the central bank's books becomes 10 billion. The revaluation losses are just for accounting purposes. It doesn't mean the central bank has lost its 1 billion investment. And these are the sort of things that in accounting sense will go into these losses and negative equity that we are seeing. But the bigger picture is that what did Ghana gain out of that? Inflation is low, the cedi is stable. From a cedi that was the worst performing currency some time past to a best performing currency, the central bank has done something right. And so let us discuss these balance sheet issues and the loss by looking at the greater public good. What did Ghana maintain out of that? Look, I did a study with a few of my colleagues.
So you're pointing to the gains.
Stabilization of the currency and all of that. And we saw that, look, even the interest payment alone that the Ghana government saved, if we are going to pay our interest on our debts at the projected almost 16 cedis by the IMF, and when you got it down to 10, the amount of money that we saved from our budget in paying those external interests is very huge. because we're able to stabilize the currency.
So you're looking at the gains is a justification for the cost or the loss that we are seeing.
Subject the central bank's balance sheet to analysis like we are assessing a corporate entity. And so I want to urge the politicians in the studio that let us look at the central bank as the institution that brings credibility to this economy, that is able to fight or get our economy out of crisis when they don't cause the crisis. And when we do that, we allow this institution to carry out its mandate. And those who manage it will be able to do that in the right way to give this economy the stability that it wants. When we throw in too much political noise, I'm very sorry about this, but it is so wrong. 2 years ago, the stance that some of us took that, look, it is a public good, let us not subject the central bank to those sort of criticisms because we have to fight inflation, and to fight inflation, have to come at the cost. It's the same issues that confront us today.
Mm-hmm.
So let us begin to take these issues for what it is and analyze it and ask ourselves questions. Did we benefit from the cost? And I'm telling you, Alfred, the cost is, when you compare to the benefits, it's insignificant. Yes, there are issues that the central bank, by the support of government, should be able to deal with in getting the negative equity. But when we had a negative equity initially as a country, I remember that then the central bank had a plan in 5 years to see how best it can take the equity away, the negative equity away. And it will need the support of government. The gold board intervention as part of a domestic gold purchase program brought enormous benefits in minimizing the smuggling that was taking place, that was sending our gold out, and the receipts never came in. What has happened on the gold board is to be able to buy the gold at a near world market price, to stem the tide in the smuggling, and send that gold outside, sell the central bank keep part, and the part that comes to the central bank, because the gold board pays the forex rate and the central bank has to put it in its books at the official rate, there's a margin there. That is what translates into the cost, apart from other costs.
I see.
So what has it ensured? It has ensured that we've built enough reserve buffers. It has ensured that there has been enough forex.
I think that the fundamental consideration here is that, Prof, the fundamental consideration here is that, yes, the gains are there, but then again, also, the thinking as to how to reduce the transactional cost of the entire domestic gold purchase program, because then over 9 billion cost we are talking about to the program, the rate gap or the forex differentials constitutes about 83% of that over 9 billion. Certainly that must be concerning. So possible review of that going forward, is that one you subscribe to? Because the Bank of Ghana itself is looking at other ways of reducing this particular cost.
Yeah, Alfred, the point is that the margin between the forex rates and official rates will close. Once the currency is stable, inflation is low, that gap will close. So we are expecting that gap to close so that the translation effect of those losses would also, those costs will also come down. Apart from that, I think that we need to also increase the security at our ports of exit to ensure that the smuggling will reduce, so that there's the gold board and the central bank will not have to use prices that will serve as an incentive to stop the smuggling when the security agencies could do that. Because when we tighten up security and the cost of smuggling is very high, then you can take away that margin and still be able to get the smugglers to rather sell the gold to the gold board. So we need to tighten security at the ports of exit. That is one solution that will help the central bank and gold board to reduce that cost. Apart from that, I think that the Treasury, which is the Ministry of Finance and the government, should take part of that cost, because when the currency is stabilized, don't forget, Alfred, I mentioned that we do a lot of savings in our net interest payments. Because don't forget that our interest payments that we pay for external debts are coming from our budget, our revenue. Our revenue is in cedis. So when our currency appreciates, we pay less cedis for the same interest to our external creditors. And therefore, that also saves us some expenditure on our fiscal outcome. And therefore, those savings that we've made, part of it can go into supporting this. And that should be done gradually over time. Monetary policy, such interventions are public goods. Ghana needs to get to the point where we say, look, for us to maintain the stability and build the resilience, to expand output, to create jobs, attract foreign direct investment, it has to come at a cost. And we need to brace ourselves whilst we are being efficient at that, to incur those costs, to build the resilience our economy needs.
Okay.
We cannot allow our economy to go back to the crisis again. And this is the time that we need to take that hard stance that, look, whatever it takes to maintain the stability of the currency, whatever it takes to maintain a low inflation environment, whatever it takes to build enough reserves to assure the market participant that the central bank has enough reserves to reduce the volatility in the exchange rate, to assure
Mm-hmm.
businesses that there's some stability that they can be assured of so that they can expand.
Okay, but Prof, while we look at what's happened in the context of the central bank's mandate, we will also have to be mindful of its solvency, is it not? So that in as much as they are doing this to ensure that there's price stabilization, there's currency stabilization, it does not affect the solvency of the institution. That's a major consideration.
There's no doubt about that. But let me tell you, Alfred, that all over the world, when central banks are into crisis management, it takes a hit on their balance sheet. And it's normal. You can check the European Central Bank, you can check the US, you can check so many countries. You find out that the central bank's mandate is purely to fight crisis, stabilize prices, do this, do that. And to come at a hit at their balance sheet. I'm not saying that this should go on forever. And I've said that once the economy is stable and you build that resilience, these issues that we are talking about will not be there. If you look at the period between 2017, 2018, 2019, the central bank actually made profits. At that time, we had come out of a fund program, or we were exiting a fund program that stabilized our economy to that extent. But as a result of other things that happened after that time, we found ourselves in crisis in 2022. So we should look more at the gains from the stability and what is coming in the next 2-3 years. That is what our focus should be on.
Okay.
But this noise about this course that has taken place over the last 3 years, I'm sorry to say that whilst it's good for us to discuss that, we should allow the central bank to be clear on its mandate to achieve its mandate. The negative equity doesn't mean that the central bank will be policy insolvent.
Right. Prof,
it is
stay
not
with
going
me.
to affect the central bank's conduct of its mandate.
Okay.
And that's why the central bank is set up. But we need to look at all the analysis in the studio and look at the central bank as a public good. And look at the enormous benefits of the stabilization that we've got and compare it to the cost.
Right.
Yes, we should reduce the cost. We should look at other items on the balance sheet and try to reduce the cost.
Okay.
But I don't think that the central bank is up for criticisms. If anything, we should applaud the central bank leadership from the time the crisis started up to now.
Right.
For where Ghana has come to at this point.
Prof, stay with me.
4 years, everything has been turned upside down, and it's something that is worth commenting on.
Great. Kindly stay with me. I'll come back to you as we conclude on. Alfred, I'm going to come to you as well, but Martin, people, Prof is referencing these indicators, all of which I've talked about earlier, and then also the appreciation of the cedi against the major trading currency, and how that has trickled down to the ordinary man in terms of the cost of living. Honorable John Darko says that he hasn't experienced it yet. But inflation we've seen reduce right from 23.5 to 5.4. This is the year under review, 2025. And then also lending rates, as a matter of fact. In fact, the total debt stock as well, because of the dollar component of the public debt, when the cedi appreciated, it led to the reduction of the debts, the public debts, as a matter of fact. Then also the lending rates, or the policy rate going down, which eventually influences the lending rates as well. We've seen consistent decline. And does that square off the cost that we're talking about, or the debt that we're talking about? The loss to the Bank of Ghana?
Okay. What I'll say is that by and large, it's positive, okay? Positive because you're looking at the exchange rate having fallen, right? From 14.7 in January 2025. And then we ended the year at 10 point something to $1, right? And in the process, you see how the prices of goods went down a lot. So when Honorable Daku said that he hasn't seen the data, I was like, was he living in Ghana or he was in
So he's speaking to his personal economy.
Yes, and we are talking about, so they play Dominic Nitiwul on the floor of Parliament crying that the price of rice had reduced so much that he couldn't even sell anymore. Prices had come down significantly. We have it. Maybe Abdallah should play the Dominic Nitiwul, the member of Parliament for Bimbila and an MPP member, former Minister for Defense, saying that yes, prices have come down, which is good for all of us, but in the event, his profit had gone down. So where you have a colleague member of Parliament saying that prices have come down, if John Daku chooses to say that nothing has happened, well, it's normal that for politicians, once it suits them, even when the thing is black, they'll say it's white. Because I am talking about my personal economy.
Is also his
fuel
personal
came down so much so that we could even afford to take on the Doomsday levy of 1 cedi per litre. Not even the whole gallon, 1 cedi per litre. So fuel prices have come down. Yes, of course, we know there are external factors. Oil prices around that time were $65, etc. But you can't take that everything away from the government. The government also did something good. The government also did something good because if they had gone on a spending spree like the MPP did, etc., we wouldn't have had those gains. So when people say, oh, when it comes to the oil, it's the international market, I disagree. If the government had gone on a binge, spending left, right, center like the MPP did, we wouldn't have had those gains. So the discipline is also a policy, right? So to the extent that fuel prices came down so much in 2025 that we could even absorb a Doomsday levy of 1 cedi per litre, and we didn't feel it that much, to the extent that prices of some goods, and rice is a huge staple in Ghana. Rice is a huge staple in Ghana. Come down. We felt it. The cost of living reduced, except, of course, because unemployment is a huge problem. Millions of our citizens are unemployed. There will always be the issue of cost of living crisis because for them, they don't earn income, right? But in terms of prices coming down, you can mention eggs, etc. on the market. So many. You can listen. I think we did previous shows where people testify. Even Professor Jampo saying he went to Medina market, he could show how prices came down, etc. Right? So for me, it's clear that the benefits have been huge. And I like what Professor Texan mentioned. You see, when Atuforsen in December 2025 paid one of our debts ahead of time, the saving was about between 70 and 100 billion cedis. When he paid. And even our external debt.
Yes.
Our external debt even reduced by over by 100 billion. Yes, our external debt, Mr. Dako, came down by 100 billion. Yes, I want to remind you so that in case you are
when I'm talking, you don't interject because you guys are fond of doing that. Anytime I start talking, everybody will come attacking me. But you are free to go on. I mean, how can you be quoting Professor Jampo as the one who went to Medina market to tell us that price of goods are low? Can you imagine that, Professor Jampo? I'm happy today he's not here. You said Professor Jampo to go to Medina market. Will he come and tell you that the tomato prices were up?
Okay, then you use the Nitiwul example.
What Nitiwul example? I was in fact when Nitiwul said that.
Yes.
Look, the farmers had worked so much so that there was glut in the system. That was what it is. There was market glut. You understand? And so people just couldn't purchase them, and the farmers were crying. That's what he was talking about. Not because the price had come down, because they had worked so much. Come on, what are you talking about? They had worked so much, and they had excess. They had bumper harvest, and that is why they had this issue. You guys come and tell me that.
So the farmers' situation is
farmers don't work in the back.
Farmers work hard in the back. The economy and the system supports them.
The farmers have worked.
So you see,
don't tell me that the government did anything. Now, as it stands now, their produce are still not being bought. The farmers in the north, their maize, all the cereals, beans, they are not being bought. This is a government that is celebrating debt. When your people are hungry, they cannot even sell their food stuff.
They are hungry. Their food is there. You say they are hungry. You see
it's not a problem because when their produces are not being bought, you think they will not go hungry. And some of them, they are threatened that this year they are not even going to farm because they had so much glut. They are not going to be able to make money.
It's a perennial statement. It's a perennial statement that if prices stay at this
don't come and put this on Little. The Little said that the prices comes down. No, that wasn't the context in which you were speaking. Little was talking about the glut. You were talking about the proper harvest which the farmers had. Don't tell me that.
Oh no!
If you invite me,
I can't play my ear, but I'm sure we'll send it to Abdallah.
Really? So now you are the one sending TV3 videos to play.
Make your point.
Make your point. Don't send him. Let him play. Let us see. Then you guys are working together.
Hold on, gentlemen. Hold on.
Okay.
I allow.
Okay, I get it.
I allow a certain level.
I am not going. No matter what, I will stay here and voice out my view.
I allow a certain level of interaction.
He's going to give me video to play. You should have your own program.
Gentlemen, hold on.
Not what my brother Martin will tell you to play.
Are you listening? Just
yes, I'm here.
I allow a certain level of interaction.
Yeah, so I'm done. So let's
continue. It is not supposed to generate into the realms of distraction.
Yeah.
Let's maintain some decorum. Let's maintain some decorum.
Yeah,
because he referenced, and I'm saying, let's move on.
Thank you very much. So let's go. So evidence. Please check my journal online, right? 25th December 2025. Average price of food commodities drops by 32% over last 1 year. Agri-Food Security Monitor Report. Average food prices dropped by 32% in 2025. Check my journal online.
Okay.
Right? There you will see the details. Please, we are dealing with evidence, not any statements in the air.
Right.
Yes, then I'm also interested in the what Bank of Ghana said in 2022, where they made a distinction between policy solvency, right, and the general efficient running of the economy. Let's hear what Bank of Ghana says.
The same Bank of Ghana that is giving us this
says that why central banks are reporting losses in 2022. So it says central banks exist to fulfill their policy mandates, including price and financial stability. The attainment of this mandate involves the central bank taking on financial risks such as credit risk and interest rate risk through loans to commercial banks, governments, or currency risk. Though the holding of foreign exchange, through the holding of foreign exchange reserves. Some of these risks may materialize, leading to losses. Making losses may therefore be perfectly compatible with a central bank's remit of ensuring the smooth functioning of the economy. Please, let me repeat. It says, some of these risks may materialize, leading to losses. Making losses may therefore be perfectly compatible with a central bank's remit of ensuring the smooth functioning of the economy. Right?
Yes.
So then it says it contributes to smooth run of the economy by maintaining.
But there's a limit to the loss of which the Bank of Ghana can make.
Yes.
It doesn't have to threaten its solvency.
Excellent. But when we say solvency, so let's correct this. You see, so we want to separate policy solvency, right, from the commercial solvency.
Absolutely.
So when it comes to its policy solvency, they say generally, and please, you can check Bank of Ghana website, is there. Is the Bank of Ghana's ability to be able to fight inflation, do stability of the financial markets, etc., right, without relying on government. So that's if Bank of Ghana can cover its costs, paying staff, etc., without running to government for money to pay the staff and those things. It is policy solvent. And they insist that policy solvency is the key thing.
Okay.
Policy solvency is a key thing. So you look at Article 1A3 of the Constitution, and it tells you the mandate of the Bank of Ghana. So briefly, issue the currency, 1, then 2, promote and maintain the stability of the currency, and direct and regulate the currency system in Ghana in the interest of Ghana. Be the sole custodian of government funds, etc. Right? So you look at it, they say they achieve policy solvency. And once they're able to carry out their mandate independently, it is sufficient. So my point is that in 2022, when we made that loss of 60.8 billion, this is what the Bank of Ghana brought out, insisting that even in the face of a loss of 60.8 billion, they were policy solvent. They were policy solvent in the context of what? 54% in inflation in December 2023. 2022. In December 2022, look at this. Inflation was killing us. And yet Bank of Ghana insisted that they were policy solvent because they were generally in charge of the financial system.
So this particular year you are talking about?
54, yes. So 60.86 billion. Yeah, and they bring the inflation rate out. You see, 54%. Yeah. 54%. And in the face of 54% inflation, Bank of Ghana said they were policy solvent, and it's policy solvency that matters most. So if today inflation is about 3%, okay, which we are matching the UK and US. Well, of course, the EU rate is around 2%, but with our inflation around 3%, we are matching the US for boot for boot, and the UK as well. Today, you want to say things have gone haywire. I don't understand this.
Okay.
Let's speak to the figures. At 60.8 billion, you said
I'll come to you.
You were policy solvent, everything was kosher, and leading to a negative equity of 55 billion. Let's put this. So remember that the Bank of Ghana had some positives. So when they posted the 60.8 billion to the General Reserve account, it resulted in a negative equity of 55 billion. And they said they were policy solvent. Today, what's the equity? Far lower.
Okay.
The negativity far lower.
Negative equity is 94 billion.
And negative equity is 94.
Yes. 93 billion. What are you talking about?
Just to buttress what Martin,
I'm looking at
to buttress what Martin is saying. Now, you see, when you look at their total revenue, it is 22.28 billion. Now, this 22.28 billion is enough to run their operations.
Thank you. That's it.
And that's key, because one of the things we're seeking for is independence
of the central bank.
Of the central bank.
Are they independent? When Ato is asking to see their procurement plan,
hold on. I would allow you to the point of bringing the issues. Hold on. I would allow you, gentlemen. Hold on.
Yes.
Because if I come to you, I would want you to also have your time.
Yes.
So let the others have their time.
So I was just saying that when he talked about policy solvency, the key figure to look at is this 22.28 billion in their revenue, and it's made up of several things. The biggest item, though, which is worrying, is that the biggest item, 9.57, came from gold. Right? Now, of course, gold is then subject to all manner of risk. But the important thing is that in the year under review, they made 22.28 billion.
Good.
And so they were able to support their core operations from that revenue.
That's it.
And they were, so when Martin says they're policy solvent, we have to agree. And it's in the same context that we look at the losses and we look at where the losses came from. And you'll see that some of the losses actually book losses rather than fiscal losses. And that's also very important. Some of the losses are from DDEP, which was a few years before 225. So some of it are embedded losses that are being carried over. Alfred, I rest my case.
Thank you. Alfred, can you hear me? Well, there's another Alfred on Zoom, by the way. Alfred, can you hear me? No, unmute for me. Unmute for me.
We're missing something fundamental.
Yes.
Right.
While you do that, in a minute,
something
quickly.
fundamental that is actually happening in the economy that I think we're not bringing into the context of this discussion.
Quickly.
Now, something significant happened on the Ghana Stock Exchange in the month of March and beyond. I'm sure Uncle Joe would lend credence to that. Right. You look at the strong rally and the surge in investor confidence on the Ghana Stock Exchange in the year 2026 and the month of March and beyond. By April closing, you'd see the significant gains in the valuation of Ghana stock market, which has never happened, historic. It's crossed the line of 15,000 points. So these are gains of the economy.
Is Uncle Jackson lending credence to that? You asked him to lend credence.
I am lending credence.
It's standard
lending credence
for you to look at. And you look at
those numbers.
Okay, thank you.
Those numbers are right.
Thank you very much.
They are open numbers for you to go and have a look at. So if we have to have the context of the functionality of the central bank and the gains of the economy and what's happening, we need to look at it from a holistic point of view, including what is happening or the historic trends that are happening on the Ghana Stock Exchange.
Thank you. Alfred, see, one of the issues you highlighted in one of your write-ups ahead of today was the cost, the transactional cost on this domestic gold purchase program, this particular one, which the central bank has been explaining exactly what led to it. And the fact that going forward, the bearing of the responsibility or the burden of this particular debt is not going to be borne by just them alone. That clearly tells you a certain shift in policy direction, right? And it will be spread across 3 institutions. And the fact that we're also saying the appreciation of the cedi will then also lead to the moderation, or as in the rate gap will be reduced in a bit. Does that answer the concerns that you had regarding this cost of transaction on this domestic gold purchase program over 9 billion?
Alfred, can you hear me?
I can hear you clearly.
Okay. Yeah, so I think there's some clarity that has been provided, but I don't think it addressed the issue, right? And I think it's important that, when we are looking at the central bank, of course, the central bank is different than when we are looking at, say, the gold board. So I know the guest from the Bank of Ghana had said that the gold board, for instance, has acquired its own financing, together with the financing that is coming from the Treasury, right? The central government, the 4.5 billion that was disbursed late last year. And that's where the key thing is, right? So it's not, because we're looking at, for example, we're talking about the rate gap. And here we are also talking about formalization of the artisanal small-scale mining sector. Right. So why would we be operating with the power market interest forex rate when the interbank is the official rate, and we are talking about formalizing the sector? Now, I concede that last year was like a transition year, if you will, for the gold board, in the sense that it is starting up. There's a lot of things it's trying to disrupt the market, in the sense that the market is used to a particular way of trading, and so I concede to that fact. But I think that there's a lot of hard work that needs to happen in this space, right? And so if we get comfortable with, but this is a cost of the policy, then I don't think the hard work that would need to bring down that cost is going to get done, right? And so to put things into perspective, for example, the guests in the studio were talking about 850 million that has been mobilized by the gold board, both from the government and also from its own pre-financing sources to trade. The Bank of Ghana is reporting a net loss of 9 billion. So already you could see how quickly, if we don't address this issue with the losses that occur as a result of this trade, you could see how quickly we will erode that capital, right? So this last year, we operated on the books of the Bank of Ghana. So the loss is sitting on the books of the Bank of Ghana. But going forward, when the gold board is doing its own trading on its own books with financing that it has arranged, because we know that the central government doesn't have, we already dealing with an issue of limited fiscal space, right? So we don't have money to continue to recapitalize the gold board, for instance. And so that efficiency is very, very important. I think sometimes we tend to focus a lot on the generation of the forex, right? The fact that yes, we're buying gold and bringing in forex, but the cost at which that forex is coming in, and its impact on, say, the trading capital that the company has to trade with is very, very important, right? Because we don't want that depletion of the capital happening. So I think that's where. So I asked the question, for instance, that we know that the raw gold is not sold on the international capital, on the international market, at the international price, the spot price that is advertised. So why do we buy the raw gold at spot prices, right? And we are the same people that have passed the law that have made the gold board the sole buyer of gold, of small scale gold in the country. So if we still need to use price incentives, which then will later downstream lead to losses for us, then we have to re-examine the whole operating model, right? And we have to look at things like, so I know Prof. Texan was talking about things like enforcement. There's so many parts. There's a lot of work that needs to be done. I think that if we prematurely declare success, then we might push some of those hard work that needs to happen to basically actually formalize the sector. We might put some of those work into the back burner, right? So that's why for me, I think that, we need to really, really examine the model again. And I'm happy to hear that, there have been some talk about, modernizing and also like improving the model. But there's a lot of work that needs to happen in that regard. So we cannot sustain these losses, especially, the Bank of Ghana is big enough to be able to absorb those on its balance sheet. And we can talk about accounting losses and paper losses and things like that. But when we are dealing with, like a state-owned enterprise or a state institution like the Gold Board, having pre-financing arrangements with off-takers elsewhere and also getting money from the budget to trade, we cannot continue to take these losses. And so we need to really see changes happening.
You talk about the changes, and that's what they mentioned already, that now one of the significant policy shifts or change we're going to see is the spreading of the cost, as in cost sharing, essentially. So that even though, yes, we're going to see the forex differentials, that's the rate gap, also addressed with the appreciation of the cedi, because the rate gap is about 83% of the entire cost of the transactional cost on this domestic gold purchase program. That's going to be addressed, and also spreading the burden of the cost as well.
Yes, but Alfred, spreading the burden is accepting that burden, right? And the Treasury, again, is operating with limited fiscal space. So the Treasury doesn't have that ability. We already in a deficit at an overall level, right? So we don't have that luxury of saying that we're going to accept that burden. So the work has to be done to almost eliminate that burden, is what I'm saying. But spreading it is accepting.
Yeah, but for as long as we continue on the path of, for instance, buying the gold at open market rate, and then if we are selling it, we're applying the Bank of Ghana rate, which is lower than the open market rate, that differential will still be there.
Yeah, and that's the hard work that I'm talking about, Alfred, right? So because if it's about just, we need to get forex in, so let's buy gold at whatever, it doesn't matter what rate we are buying it at, and then we get forex in, then that's not innovative, right? I think the real work is we're able to transform the market and change the market mindset to the point that accepting the interbank rate is normalized, right? That is where the real work is. That's what I'm saying. So us being able to price in a way that we won't make losses on the trade, and we will still be able to keep up the volume that we are getting from this sector, which is largely informal. That is the hard work that I'm talking about, right? So if we come to this acceptance that we're going to spread the burden, then it's almost like we have accepted that this is going to be the status quo. But the problem is that, like I said, the depletion of the capital that the institution has to work with. That is what I am worried about, right? Because we wouldn't be able to recapitalize them over and over. So basically, we wouldn't want to create a cocoa board situation, because cocoa board might also say, well, we are also meeting a strategic objective, right? And so why don't you continue to, why do we talk about cocoa board losses, for instance? Because we know that the institution should be able to still operate efficiently, right? And Gold Board being new, this is why I'm saying that personally, I give them benefit of the doubt in the sense that, last year was a transition year for them. They are trying to change things. But going forward, if we resort to declaring success prematurely, when all these issues are outstanding, then we won't do the hard work to make it work, is what I'm saying.
I see. Well, but we are seeing a certain development as well going forward, and that has to do with the open market operations as well, the interventions by the central bank in the market to control inflation, which is, in fact, at the core of its mandate as well. Now, we're analyzing this, taking into consideration the broad mandate of the central bank. Now, that operation also brought some cost, and that's why I referenced earlier that to every economic decision that has resulted in this positive outcome that we are seeing came with a cost associated with it. Was it worth the cost?
I think it's a very hard question to answer whether it was worth the cost. But I think you can point to the benefits, right? If you for an economy that was dealing with inflation, they were sticky, like around 20, in the 20 to 23% mark out of 2023, 2024. So if for that inflation to be able to go down to 5 point something that we ended the year with, and still declining, I think it's you can point to those benefits. We know that when the currency is stable, there is also a pass-through effect on inflation. Like, for example, Professor Janku from ISE had estimated that a 10 points depreciation would also pass through about 2.6 percentage points on inflation, right? So when you look at that from that point of view, the benefits are real, right? People are feeling it. The lending rates going down, and all of those macroeconomic indicators performing well. So you can point to those benefits. But again, two truths can exist, is what I'm saying, right? So the institution that is helping deliver these outcomes is also under financial strain. And I think sometimes we might try to say, the Bank of Ghana is different and it has to meet policy objectives and all of that, and that's granted. I point you to 2023, I think, when the 2022 financial statement had come out, right, and the Bank of Ghana was trying to defend it. One of the things that the central bank governor at the time said was that if they had not intervened in the economy in the way they did, Ghana was going to a tipping point and almost going to a Sri Lanka
kind of situation.
Type of situation. How do you, what is the benefit of that? How do you monetarily, what is the benefit that we place on preventing an economy from collapsing, right? And is that justified? So at any point, like these justifications, we can come up with them, we can discuss them. But to me, the fundamental thing is that, the Bank of Ghana has a significant hold on its balance sheets, in its books. And that must be financed. And we know that there's a recapitalization plan that the government has with the Bank of Ghana to try to recapitalize. So even in as much as we might sometimes say that these are paper losses and things like that, these are real losses, because we are talking about now going to take money from the treasury over a number of years, I think up to 2032, to recapitalize the Bank of Ghana. So if these losses and subsequent negative equity were not as important, why would we need to now spend money that we could go to schools and through other infrastructure and social intervention programs to recapitalize the Bank of Ghana? So I think that I will not be able to give you an answer of like whether it was worth it. I think the benefits are there, but the costs are also real, and we must kind of have a balanced discussion that way.
Thank you, Zako. Quickly.
Okay. Just a quick intervention on this. You see, one of the things I believe we're also losing fact of is this gold you are talking about, the source of this gold. According to Minerals Commission, 51% of our gold export, which gives us all this money, is from the small-scale mining companies. Yes, and the
small sector.
Yeah, the small-scale sector.
Mining sector.
Artisanal small-scale mining companies. And this same Minerals Commission says that 70% of these artisanal small-scale mining people engage in illegal mining.
They said it's in which report?
Oh, well, the information is out there if you want to.
No, I just wanted to.
No.
So if there's a specific report that you're quoting, so I can check.
No, I will provide that for you. I'll provide that for you.
Right.
Okay. And if 70% of the artisanal small-scale mining companies engage in illegal mining activities...
Artisanal small-scale mining companies?
Yes.
Licensed by the Minerals Commission,
artisanal
engage in
mining,
illegal mining.
70% of them.
And the Minerals Commission knows this?
Yes.
And they haven't done anything about it?
Yes. So I'm saying
this is
the president himself has admitted that his people engage in illegal mining. So let me make a point. So let me make my point.
No,
I don't know why
asking,
all of you start attacking when I'm making my point. So let me make my point. After that, you can also make your point that 70% of the small-scale mining companies engage in illegal mining.
Are you saying that's what the Minerals Commission said?
Oh, Master. Why? So how many times do you want me to repeat it?
No, so that if you are checking, that's why I wanted the report or the statement.
You can go to their website, you can go to Minerals Commission's website and check.
I see, okay.
So I'm saying that if 70% of the small-scale mining companies engage in illegal mining and government is buying this, then you should know who is funding the galamsey. Now, the galamsey activity is on the rise in the country because of the amount of money that is going in. These billions of CDs from BOG, which is supposed to go into
the
social
small-scale miners,
and now, yes, we are buying that go from the small-scale mining companies.
Yes,
and that is what we are using to fund all these programs we are talking about. So it is very important that as a country we look at it, because let's not talk about we are buying gold as if we are buying the gold from clean sources. 70% of small-scale mining companies are engaged in illegal mining activities.
And the Minerals Commission said this, and they haven't done anything about it.
The president himself, he said he knows his appointees who are engaged in illegal mining activities. He hasn't done anything about it.
With the Minerals
and I'm saying that even the president, even the president has said that. Even the president himself has said that his people are engaged in illegal mining activities. He hasn't done anything about it.
And 70%. The president is backing 70%. At one breath, 70. At one breath, the president.
But I made my point. Let me see, when I'm making my point, all of you begin. I don't understand why. You guys are not patient at all.
No.
Share your facts with us. The 70%. We are interested.
So I'm saying that this is a government that's actually promoting legal mining activities. Now go to all the mining communities. Illegal mining activities are on the rise. In fact, the West Form, the West Form is that now the illegal mining operators use cyanide in order to be able to extract more gold from the ore. This is what is happening across the length and breadth of the country. And this government is aware, the president is aware, he knows his people who are doing it, and then he's not doing anything about it. So that's something we should be talking about as well. And another point that I wanted to make, when you spoke about the independence of the central bank. We want the central bank to be independent, but is it independent? And I'm saying that we are aware that the Minister for Finance is asking for commitment authorization from the central bank. He's asking for the procurement plan from the central bank. Okay, now if this is happening, would that make the central bank independent as you expect? So look, we need to be careful in this country. At one point, we think that it is okay, we talk about independence of the central bank. Yet, the finance minister is always there intervening. It's no wonder that it took the NDC majority in parliament to come and share all this information with us. Until I guess we brought the BOG staff here. They hadn't spoken. It was the NDC majority in parliament that broke the news, that spoke for and on behalf of the BOG. Too much of independence of this.
Thank you. I'll come in here. I mean, when we talk about, just a quick response to what John said. I mean, when we talk about independence of central banks, we all know what happens within the functionality of a central bank and, curbing, driving the monetary policy, etc. But if I thought that you were going to come in, I can't corroborate the fact of commitment authorization, but I thought that you were going to come in to say that the Honorable Atuforsen stepped in and said that they should manipulate with inflation, with figures, right, to reserves, etc. That is what, tampering with these is what is inimical. No, tampering with the core functionality of the central bank is what amounts to the inimical nature of its independence. You haven't brought that up. And yet you are on the spree saying that commitment authorization. Is it not a good regime to call for commitment authorization to look at how we can get our procurement laws in place and get procurement decent within the value chain of procurement? So bring something to say the Honorable Finance Minister is interfering in the monetary policy rates of the bank, and we would say the central bank is not independent. In the reserve values of the central bank, manipulating figures, then we would say the central bank is not independent. But if you come out to say this, what are you talking about? You're talking about small-scale mining. And what breath you are saying that the Minerals Commission is saying that 70% of small-scale mining companies, you didn't even say small-scale miners, you said small-scale mining companies, look at the qualifier, are engaged in illegal mining. You can't collaborate with this fact. I'm not saying that they are not.
No, you see,
but I'm coming.
That is why it is my responsibility to ask for the source.
The source. That's why I'm asking.
Of the information,
but
which I did.
That said.
But we are checking the website.
Yeah, let's fact check that. But that said, Alfred, it is only fair. No, let me conclude. No, let me make it. That said, Alfred, that said. No, Alfred. No, come on. Alfred, that said.
Chamber of Mines.
That said, it is only fair within the context of our working mineral laws that majority of our current mineral regime, that majority of such gold would come from small-scale mining companies. Why? Because the law has given sole preserve for Ghanaian indigenous companies to grow them to get that. So that is even in and of itself an achievement. That if we can gain this, it means that the law was thought through very well, and its implementation has been delivered. So how is this a negative for you? So you don't want us to buy from our indigenous mining companies. You don't want our indigenous mining companies to be part of our value chain. Is that how you want to kill indigenous mining businesses in Ghana?
I was referring to Chamber of Mines. I think it's important to make that intervention.
Conclude.
Which is an industrial body.
You've made your point. Thank you. Yes. Jackson, we're rounding up on this, so I know you have to leave us. So
yes.
So the way forward, indeed, after diagnosing this and then also understanding the trade-off as a result of this particular cost that we have seen, or this loss we have seen.
Okay, now it's also important for us to indicate what red flags we have for the central bank going forward. Now, one of the key red flags is this consistent losses, right? The negative equity is not sustainable in the long term. So at some point, we have to have a plan for returning back into profit. Whilst we acknowledge that they have policy solvency, this is a very, it's a problem to look at. Now, the other thing is that this open market operations, which serve to bring down inflation, was at a high cost. It's like getting a fire and using pure water to douse the fire, instead of water from a hose. So as we move forward, we have to look at, first of all, we hope that the high cost was partly because of the high starting point of 20 plus percent in inflation. Now that you've brought it down to single digits, we hope that the cost will come down considerably. Then there's the issue of gold, which is their highest revenue earner. We have to ask ourselves, gold itself, what we've done with gold has been remarkable, has been a game changer. But we cannot rely on gold long term, because there are other examples of other central banks that have taken up positions in gold that over the long term have lost money. So it's then this issue of DDEP, it's a problem, because it's almost as if I go and make losses as Joe Jackson and I ask my accountant to take a part of the losses, because it's the government that makes the loss, right? But the central bank is taking it up, and then finally relying on the government of Ghana and that public purse, which is already under pressure for recapitalization, has challenges for independence. So these red flags are there, and we must look at them going forward. But all things said and done, for 2025, the losses, I believe, are acceptable.
Thank you, Mr. Jackson. Thank you very much for joining us. Joe Jackson is the CEO of Dalex Finance And there was a question to you. This one's coming from Dr. Kwame Asante. Says, good morning. I want to find out from Joe Jackson, since he is a major market player, as to whether the level and magnitude of the Bank of Ghana's interventions in the market should continue. That is OMO, that is the open market operations of sterilizing, essentially, or borrowing.
Quantitative easing.
Yes, all of those terminologies. Let me just break it down. Borrowing from the commercial banks at a certain interest rate, so as to control the amount of money or cedis in the system, to control inflation, essentially.
First of all, rates have come down significantly. So it is expected that that quantum of expense, the differential will drop significantly, and the volume of transactions that were made will not happen. So the simple answer is that going forward, given the level of rates, given the level of inflation, given where the Ghana reference rate is, given where the monetary policy rate is, we don't expect open market operations to cost as much as they did in 2025.
This one from Dr. Norte says, gold is showing volatility and the Bank of Ghana should guard against vulnerability. It says, bottom line, responsible risk-taking. What should be the way forward?
I agree with him. And remember that one of the red flags that I talked about was the fact that there's so much reliance on gold. And that's the single biggest factor in their revenue. Gold is volatile. And what makes it even more volatile is the current war in the Middle East. Yeah. Because on one hand, there will be a movement to gold in times of war. But on the other hand, some of the biggest buyers of gold in that Middle East belt have been affected. And the central banks are actually dumping some of their gold reserves to shore up the economies. Yeah. So gold is in a very volatile situation at the moment.
Exactly what I was saying, that, you know, the quantum, the jump to 50+% is significant. And I think that's where we need to watch to see how we can. I mean, it's a novel program. There are cracks within it. It's a learning curve, but you could see moving forward. The gold board is putting its acts together. And as you see, it's a transitionary period they're moving into. And once they get into full and have full control of it, then they can have a real panoramic view of what is happening within the market space. But now you could see that the central bank is still shouldering much of the burden, which is acceptable based on the current climate.
Okay. Sure.
Thank you. Professor Texan, finally on this, about the diversification of the risk portfolio of the central bank. Prof?
It's a bit aggressive.
Yes. I think that it was good that the central bank...
Please put your video on.
I'm in transit to...
that's okay. Sorry. Please. Let me hear you. That's fine. Yes.
Okay. So I'm saying that the diversification was good. What the gold that was sold last year was good, because then it considered over 40% of the entire reserves. So it was good. I mean, at the standard practice, you keep about 20% of that. Don't forget that when that gold was sold, it went on to add up to the reserve. So it's not like it was sold and money was used for anything. It was just to rebalance the portfolio for safety. I mean, and so that was quite clear. And of course, we need to do that. As we build the reserves, we need to diversify our reserves. We shouldn't be net deep in the gold reserve. But look, there's nothing wrong if we take advantage of the gold prices to let it translate into an economy for us to build some buffers and then also to transform our economy. Gold is a major export. As a country, we need to take advantage of it now that the price is good. And that will also be involved in also buying the gold, selling, and using whatever money that we have to transform the economy. So it's something that we need to take a good look at. So we also need to move the discussion beyond where we've come from to find out ways in which we can reduce these cost issues that we are talking about. I accept what Alfred said in his presentation, and I think that we need to, but that doesn't hide the fact that we also need to see the central bank more as a public good. I mean, as for that one, we cannot do anything about it. That is what the central bank is in terms of monetary policy. And we need, as much as possible, to look at the central bank's balance sheet and everything, and its cost and income statement relative to its mandates. Because otherwise, we might lose focus. If you get the central bank governor and board that care more about the books than the mandates, then it becomes an issue. So we should be quite clear that the mandate will supersede everything. At any time that the central bank finds itself at a position where it is fighting its price stability, ensuring financial stability, I think that although we might be mindful about the cost should be secondary. What we need is to be able to achieve this mandate clearly, and I think that's something that we also need to talk about. Then also, I think that we need to ensure that the reforms that have been made in the forex markets should translate into some assured stability, so that the other policies that are pursued to try to minimize the impact of government intervention, the central bank's intervention in the forex market, so that while the city is stable and there's less intervention, but more of intermediation, then the speculation that goes on when the market doesn't see the central bank having enough reserves will go away. These are structural changes that we need to make. And these changes would ensure that over the medium run, we are going to have a more stable currency that will transfer to lower imported inflation, lower inflation, and then that would make the system more stable, and it will allow businesses to plan and also to attract the investment that we need to do the economy.
Thank you very much, Professor Ebo Texan. Thank you, Associate Professor of Economics at the University of Ghana Business School. Let's round up on this. We go to the matters of energy. Still impacts on the economy, by the way. Yes, quickly.
Okay, so like people say, book no lie. I entreat viewers to Google Dominic Nituwo admits the reduction in rice prices. Yeah, just Google it. You will see the video. No, it's very, very important. So you will see him. What is propaganda? Dominic Nituwo himself. So I need you, please, just Google. Dominic Nituwo admits that rice price per bag reduces from 1,000 to 400 Ghana. From 1,000 to 400 Ghana. So that's a reduction of 600 Ghana cedis. Just Google it, then you see the video, you hear him for yourself, so that this will put to rest this propaganda that rather Honorable Daku is trying to propagate.
All right, thank you. Now, some 6 minutes of the hour, we're transiting from this Bank of Ghana situation also into the energy sector, and here's the reason why. Exactly, in fact, a little over a week ago, there was a fire outbreak at the Akonsombo, that's the control station. That entire control station was gutted by fire, and it had to take the ingenuity and also the hard work of the engineers of Gridco and VRA to be able to get us back on stream. The updates that we have is that all 6 units are back on stream now. We'll get a further update from the Energy Ministry shortly. Richmond Roxon, a special assistant to the minister, and his director of public affairs communications for the Ministry of Energy and Green Transition. Let's take a listen to the Honorable John Jenapo, who is the minister in charge of energy and green transition. Take a listen to him.
Whether doom CSA, doom or doom cry or doom so, the first thing is, let's be honest. Look, once in a while we can have challenges, like we are just witnessing. Unpredictable, nobody foresaw it, nobody could tell the magnitude of it. And when you have such a situation, don't try to play tricks with the people. We have a deficit. And we've admitted that because of the fire incident, we have a deficit. I've directed ECG provide periodic updates on regional basis, areas that will be affected every 12 hours, because it's a very short duration. Like I said, we are looking at this week. So you can't do a weekly schedule. And even what you provide a day, it keeps changing because Just this afternoon, we've had another plant come on. We are looking at another unit coming on. So we provide that periodic update. People are not happy. That's a fact. But I know that people are discerning. People are very discerning. Ghanaians have the wisdom. And they know that we have a legitimate, genuine challenge that is not of our making. And they know that we are putting efforts to address that. That is a better approach than telling the people that you are engaging in doom CSA. When it comes to timeline, that is a stepping aside of the Gridco MD.
As a Minister in charge of Energy and Green Transition there, so live here on Key Point. We're live as well on the Voice of London radio in the heart of the City of London, and Voice of London television all across the world on TV3 Ghana, on Facebook and on YouTube. So we're back streaming on Facebook now. We're also on TV3 Ghana, on YouTube and on X as well. Quite a number of you sending us messages there. We'll get into it as we go on. And okay, Dr. Austin Game says, okay, this was related to the previous conversation, whether there's any single nation currently that is not experiencing fuel increase at the pump. Says as well, Honorable John Dakum. That is so that's from Austin Game. Thank you. So this one here says that we sell the gold at a discount to account for offtake freight, but we buy the gold from the miners at the international spot price without any discount to offset these costs. This is quite concerning. And it says, Alfred, thank you for the clarification. You say thank you very much as well for the message. You're still live here on the Key Point. Let me just tell you, as always, it's probably brought to you by GASEM, the nation builder, and then also the Bank of Africa, as strong as a group, as close as a partner. And they both are partnering and giving us strong support for the Key Point. But whether you are aiming for a specialist MBA in marketing, communication, operations and supply chain, human resource management, finance, entrepreneurship and innovation, or business intelligence and analytics, or you want to advance through a dual MBA on that's chartered marketing, just chartered manager MBA, University of the Gold Coast gives you options that match your needs. And if your next step is an MSc in International Relations, Communications and International Marketing, International Law, Security and Diplomacy, Accounting and Finance, or Human Resource Management, an LLM in International Law, Security and Diplomacy, or an MA in Biblical Studies and Practical Theology, the pathway is open. April admissions is now open. Apply now. That is University of the Gold Coast at www.ugc.edu.gh. Your dream deserves structure. Your future deserves strategy. Your purpose deserves training. Call them. That's University of the Gold Coast on these two numbers: 054 288 9045, 054 288 9045, or 026 3888 555, 0263 888 555. University of the Gold Coast, building leaders for the nations. Mr. good morning. Welcome.
Good morning, Alfred. Good morning to my co-panelists, my learned friends, Mr. Martin Pigby, and then Honorable John Dako. I'm sure he doesn't know that we attend the same church.
Why doesn't he know? That he doesn't come to church or what?
Are you at the back and he's at the front?
We've been in the same church for years, but as you know, he's always full of mission.
in my church. So
Yes, so he's
Oh, perfect. Wonderful.
We've been there for.
And which church is this?
He's an usher.
You are an usher in your church?
He's part of the protocol team in the church. He's been doing that for over a decade. And so,
wonderful.
Yeah.
Exactly.
So
it's part of the politics.
when I see the mischief, I'm a bit surprised.
No.
Exactly. On Sunday, you go and say one thing in church. Then on Saturday,
thank you. It's okay.
Let me say a very good morning to you.
It's okay. All right.
Prof, and astute Professor of Economics.
Right.
Proudly an NDC member. We're all happy to have him. So good to be here.
Good.
And add that you have sandwiched me. Very
Oh, we haven't.
I'm here to save you.
Also, no, you are 1 in 10.
Exactly.
Wonderful. Thank you so much for joining us. Now, Ms. Jackson, just a quick update on the state of affairs now with the disruption as a result of the fire at the Akonsombo control station.
Yes.
Let's start off with that.
On 23rd of April, around 2 p.m., the ministry was informed that there was a fire incident at Akosombo. At the time, the minister was doing some inspection in Tamale. You know that we are doing the transformer upgrade and replacement exercise. And so he had just arrived there to inspect what was going on with the NETCO officials. Immediately, he had to return to Accra. The fire incident continued from around 2 p.m. all the way to about 8 p.m. in the night. And before the fire service, that's Ghana National Service, was able to deal with the issue. So you can imagine the impact of a raging fire for over 7 hours. And what do you mean? The entire control unit of the switchyard, that's the substation, which evacuates the power we generate from Akosombo, had been burnt down completely. The next day, which was a Friday, we went there with the minister. There was a delegation from the ministry led by the minister himself, Honorable Dr. John Jinapo, together with the GRIDCO management at the time, VRA management, power sector players, to get first-hand briefing of what had happened. In fact, it was extremely devastating because the initial briefing we had was that it was going to take 6 months to be able to restore. Wow. And losing about 1,000 megawatts, that was about 25% of your generation capacity for 6 months would be huge. Yeah. And a lot of people don't know, it's not just about Akosombo. Pong, which is also hydro, Akosombo has an impact on it. When Akosombo generates power, the water gets to Pong, and Pong is also able to generate. Pong gives us about 160 megawatts. And so it had affected both. So ostensibly, we had lost about 1,200 megawatts of power. And the briefing of 6 months was difficult. But the minister engaged the CEOs of GRIDCO and then VRA. There were two varying opinions. We had a section of the engineers that had said there's no way you could evacuate power from there. And so we should go through the process of constructing a new control center. And then you had the other section that said no, they could come up with some technology and then bypass the control room to be able to generate the power from, use the control room in Tema for us to get power in our home. And so we had to take a risk. The government had to rely on the section of engineers that had said that that could be done. And this is where I'll commend the VRA Chief Executive Engineer, Edward Obin Kenzo, as well as the Acting Chief Executive for GRIDCO, Engineer Frank Autry and his team, and then also the power sector players, the ministry itself. And I'll commend my minister, but not because I work with him. I work closely with him, and then I see someone who is very upright, very knowledgeable in the field. In fact, his work ethic is serious, and his knowledge in the industry, it shows how long he's been around. He's been deputy energy minister, he's been deputy power minister, practically at a point from 2015 December to 2016 December. He acted as the minister for the power sector for a while, and it shows in his decisions and how he goes about it. And so he had to take a decision there. Fortunately, the decision has paid off. We started bit by bit the restoration process. We were told that within 24 to 48 hours, we were going to get the first unit back. And so we had to be monitoring, be going there. You'll be there around 8 p.m., 9 p.m. A minister will call you, let's go to Akosombo. And they will go there in the night, go and be with the engineers, go and monitor what they are doing, encourage them, support them. And we'll be there 1 a.m., 2 a.m., we'll come back to Accra, we'll go back. In fact, we've been in and out of Akosombo this week, as if we've been moving from the ministry to maybe TV3. Wow. And so eventually we had the first unit, because the major challenge was getting the first unit back. We had the first unit back, which was a good news. We had the second unit within 24 hours. The next 24 hours, we had 2 units come on. And so we had 4 units come back on stream within about 3-4 days. And then the engineers promised that they were going to work tirelessly to get the other 2 on. Thursday, His Excellency the President was there to get first-hand briefing himself, inspect what had gone on with senior government officials. And then after Thursday, as on Friday yesterday, we had the other two also come back. And so, as we speak, we have the full complement of Akosombo back on stream. Good. The 1,000 megawatts has been restored. Anybody in the seat or any country that has, like Ghana, that runs about 4,800 dependable capacity, if you have over 1,000 megawatts of it will hit you. Yeah. There's nothing you can do. And it's not because it's doomed. So I listened to Honorable Collins Adomako in the initial days before the politicking set in, asking that the people of Ghana should support government because whoever was energy minister at the time could not have foreseen that this thing will happen. And so we have the full complement back. And anybody who is honest will attest that in the last 48 to 72 hours, we've seen significant improvements in power supply across the country. We still recognize that, of course, there are pockets of issues in isolated areas. We didn't hide it. We had been upfront with the people of Ghana. The president himself, when he inspected the transformers in Tamale, admitted that there are pockets of issues in isolated areas that we are dealing with. But it's not across. Beyond those pockets of issues in those areas we are dealing with, we've had largely stable electricity before the Akosombo incident. I know where my learned friend lives, and so I hope he will not come and be politicking with it. I know where he lives. I've gone for a party in his house, and so I know that
it doesn't have to be about him.
No, I'm just saying. I'm just saying that even before he's surprised. We go for a party in his house.
No, it's okay. You, so, don't emphasize it. Let's just move on.
And so I hope he will not sit here and pretend his power has not been stable.
Say any Lord is a dungeon.
And so let me take the opportunity to also commend the good people of Ghana for the support. It's difficult. I always say that they used to say water is life. Today, energy is life. In fact, today, if you don't have power, practically you are off the world. You can't do anything. You can't work. In fact, you have homes where everybody's using air conditioners, people are using microwave, all kinds of gadgets, internet, phones. And so at all material times, we should work towards having consistent power supply. And that is what we've been doing as a government. When we came into office, there were significant challenges. And I've seen
so that's what we're going to get to the next phase. I wanted to establish what the state of affairs is with the Akosombo situation. So all 6 units are back on stream.
Yes, all 6
So
units.
is it operating at full capacity, before the fire outbreak? We're back to
yes,
that
we are
same...
back. So we are doing full capacity.
That is how much?
That's about 1,000 megawatts.
1,000 megawatts.
Yes, all 6 units are back on stream, and then they are feeding the national grid as we speak. You know, we get supply outlook, or what we call the dispatch of plants every day. And so at every time we can give you the plants that are working, which fuel they are working on, if it is thermal, and then if it is hydro, how many units has been dispatched. And I can confirm to you that we have the full complement of Akosombo being dispatched to the national grid.
Okay, great. Ben Boakye is Executive Director of the Africa Center for Energy Policy, joining us on Zoom and so on. Baji, good morning.
Good morning, Alfred.
Great.
Good morning to
Perfect. Sorry.
Team in the studio, yes.
Great. The last time we spoke, you had indicated that even though there's an accident, it is totally preventable, or it was totally preventable. What do you mean by that?
No, so for the average consumer, you and I, and maybe even the minister and the ministry, is an unexpected event. But if you are managing such an infrastructure, the way you mitigate, you deal with it, is to be in the mode of expectation. If you don't expect fire, you wouldn't even care to put fire extinguisher there. You wouldn't care to put in place the systems that are required to make sure that you are able to address such situation when they arise. And the situation we have is that, those who are managing the asset were not prepared for this kind of situation. So that was the point I was making, that if you have such an old infrastructure, building, even if you look at the building, there's no way any switchyard will be constructed the way it is constructed. Even the substations around, the control rooms that are being built around, you will see that they are completely different, roomy, well aerated, So if you have such an old structure, your risk antennas will have to be very high to make sure that when such situations arise, you were able to deal with them. And those are the lapses that, have kept me grieving over the past week since that incident actually happened. Because, to be honest, those are not the most expensive interventions you need to be able to douse fire. For fire, even if you put up a brand new, control room or switchyard, you may still have fire if any of the equipment fails. Well, how you deal with it are the modern firefighting systems, equipment that you need, the heat sensors, the cameras you need, the automated, extinguishers that could be installed in the panels to make sure that the fire can be controlled as quickly as possible and be mitigated so that it doesn't escalate. And to see, that switchyard that is close to one of the biggest dams in Africa, all you needed is, perhaps a very inexpensive automated sprinklers, some fire extinguishers built into the cabinets to explode, to douse fire. And none of these things were in existence. And I've been watching even the videos when the president did the tour, the minister did the tour, and you see some of the miserable fire extinguishers sitting outside the building. You're like, where are we, with our risk expectations to be able to deal with this kind of threats as they come? And I think that this was completely avoidable. People slept on the job, and it's been an institutionalized culture of negligence and lack of accountability that has brought us to where we are. And these are things that we've been fighting for years, and you have engineers asking you, are you an engineer? But controlling fire, you don't even need an engineer. You need somebody trained, to really know what to do and what button to press, what equipment needs to be on site to actually bring down fire. Because even when you call fire service, you are not calling, an electrical engineer from the fire service to come and quench an electrical fire. You are calling on a specialized agency that is trained to put down fire. So for us to have such an infrastructure raised down by fire, we need to dig deeper and find out how institutionalized this problem is across many substations that are as old.
Okay.
What are the safety mechanisms and protocols that could expose us to what we've seen? And even if you buy new switchyard, it doesn't mean that the copper is different from the copper that is in that building that actually got bent. You perhaps will have easier switches, nice monitors, but they work the same, right? Perhaps this one will need some manual switching. Others can have automated switching, making life easier for those in the control room. But in both situations, you just need to know what you are doing. And it doesn't appear we knew what we're doing and how to maintain such an infrastructure, understanding the risks involved, putting in place the safety measures to be able to deal with it the way we needed to do. And we had to lose 1,000 megawatts of power for 1 week. That, for me, is an embarrassing situation that people have to be answering for how we have been negligent all these years to get to that point where prayers couldn't help, but the system had to go down.
I see. Thank you. Ms. Roxanne, just a quick response to this, because these are the germane issues that he's looked at and what should be done, even though back on stream now, some of these measures we put in place to ensure that if there's a situation like this, we have a better response mechanism. I think that's where the concern is.
No, I will not argue with Ben Boachi on these issues. And that is why the minister set up the committee to investigate the happenings there and then to give government a report so that it informs government on the way forward. There's a 7-member committee chaired by Engineer William Amuna, very experienced person in the sector. He's been former Gridco chief executive. He's currently the ECG board chair. And so, yes, and the next step is that even before this incident, the minister had requested that there will be a comprehensive audit of all our energy infrastructure. It's not just even power and petroleum, to look at, take a comprehensive look at them, and then to give us a report so that some of these structural issues we'll deal with them. So it's not even just about safety, even security. The security of all our installations, whether there are CCTV cameras, whether you have even enough personnel to man these places. And so I agree with him in part. I'm sure that when we get the report, a lot of decisions will be made. So far, our government has said that we are going to construct an ultra-modern control room at the space, which will take into consideration, of course, all these modern equipment and then safety. And so I won't belabor the point. We've started the audit of all our installations.
So what's happened now is that you've bypassed the control station in Akosobo to be able to supply power to us.
So basically what they've done now is that they've bypassed because you don't have a control system there now. And then it's been integrated and we are managing it at another substation. Maybe remotely. For security reasons, I don't want to disclose where we're doing that. So we are doing that, we bypassed it, and then, like I said, they had to take a lot of brilliance and then innovation to be able to do that by the engineers, and we salute them. We commend them for what they've done.
In fact, before this fire outbreak, there were pockets of power outages, which ECG explained is as a result of planned maintenance. This fire outbreak just exacerbated the situation and we had to be going off for hours. Now, the explanation is that you are fixing a system that is fraught with problems. So you are changing transformers and so on, and fixing faults. We have heard this narrative before. You know, that was couched in the terminology doom CSC when we were experiencing some doom. So the previous administration, the minister in charge of energy, Dr. Matthew Poku Prempe at the time, said, we are not experiencing doom. So they are fixing the situation. That's why I got it, the doom CSC. You are not giving it any name. But that is essentially what we are doing now, or what you are doing now.
No, that is completely different. And
you say you are replacing transformers.
No, Alfred, I'll respond to that. And I wish that I can get the next few minutes to be able to deal with these issues. When we came into government, the whole of 2024, and I've sent you the document. This is data. This is not what I am saying. This is not what John Darko is saying. This is what the data is from Gridco. Every single month, we're shedding load in 2024. In January, off-peak, we're doing 438 megawatts. Peak time, we're doing 389 megawatts. In February, we're doing 705. February 2024, we're doing 705 megawatts off-peak. Peak time, we're doing 473. In March, the same. All the way. September, we're doing 480 peak. October, we're doing 400. November, we're doing 507. December, we're doing 720 megawatts of load shedding. And so at a time where we're calling for timetable, and if you remember the popular phrase of go and prepare your own timetable, it was because we're shedding load. It wasn't because you had enough to generate, but you are having distribution challenge. Those are two different issues. If you have distribution challenges, of course, it means that you've generated the power, but because of a particular challenge, you've transmitted the power, but you cannot get the power to the end user. But what we're dealing with in 2024, they couldn't even generate at all. And there were a number of issues that we were dealing with.
And they were deceiving us.
That was why at the time, Ghanaians were asking for timetable and consistently mentioned. There were fuel challenges. They couldn't procure liquid fuel. They didn't have enough natural gas to be able to power our thermal plants. And so those were the problems we're dealing with. Upon assumption of office, what did this government do? The government took an entire review of the power sector together with civil society group. And I will thank Mr. Bemboache as well. He offered his expertise. And at every point when we've called him as a ministry, he's offered it. So we looked at the entire chain, the structural problems from transmission from generation, from distribution, finance as well, and then you look at how you'll be able to deal with all the problems that we had. What did we do? The first thing is that you have a generation issue. We looked at how we close the generational gap. And so the beginning of 2025, when we took over, in January, we shedded load of 270 megawatts in 2025. In February, we did 203 megawatts. In March, we did 211. Since that time, April till today, we've practically not shedded any load when it comes to generation, except for last week when we had the issue with Akosombo. And I'll take my time to go through what we did. The first issue was that we had so much debt in the sector. We had a cumulative overall, you look at about 80 billion cedis in debt. Debt to IPPs, debt to fuel suppliers, debt to state institutions. And so the minister constituted a committee to renegotiate with IPPs. That committee was chaired by our own Mr. Bemboache, and they did a very good job. They had the renegotiations with the IPPs. The first thing is that the money that we owed them, physical cash, they were able to renegotiate to get a reduction of $252 million. And so monies we owed them, these IPPs graciously took a haircut and they discounted it for us. The second one is that the tariffs that they were charging itself, they managed to get the IPPs to be able to reduce those tariffs. In fact, there were IPPs who were doing about 20 cents per kilowatt hour that eventually ended up doing 6.5 or 7. That's a significant reduction. And that's why I give the committee all the thumbs up for what they did for governments at the time.
One of the concerns the Honorable Collins raised was that you have compounded this
Alfred, that's a
debt
lie.
on the cash
That
waterfall
is
mechanism
a lie. It is a complete,
as a result of the policy that you
I won't
have
even
implemented.
mince words. It's a lie. And I'll come back to that. That's why I said I will need some time to take us through all the structures and what government has done. Because you see, the power sector, there are moving parts. You have to deal with all those parts to be able to forge ahead. And so if you don't deal with them one after the other, you're going to have structural issues. And as a government, we are not dealing with the surface issues. You deal with the structure, the root cause of these problems, so that you can make significant progress. And so on the IPP side, the third thing the committee did was to negotiate with them for us to have a roadmap on the legacy debt. And so they agreed with them on how they will structure the legacy debt so that we'll pay them from time to time. The last thing out that the committee did was to ensure that, recommend to government that let's be current with these IPPs. And so whatever invoice they bring each month, we pay them. And so if you ask the IPPs, they will tell you. I don't know whether you remember the last time you had any IPP threatening government that if you don't give us our money, we'll stop generation. Because of how we've stayed true to them. We've been paying them, some get as much as 100%. Others get 90% of invoices they present every month. Because once you generate the power, we'll have to pay you. And so if you look at that chain, it has brought some stability when it comes to IPPs and then the legacy.
So for the person who's watching, why are the lights going off in some of these places?
And that's why.
And you're saying that's as a result of what? The ECG saying
no, I'll come there. I'll come there. It's important that we lay the facts bare.
I want you to.
No, I'll come there. It's important that we deal with the structural issues for everybody to have a better appreciation of where we are going as a government and then why some of these challenges we are dealing with it. So it's important, I beg you, if you give me some time. The next one is that in 2024, in fact, previously, the previous administration was relying heavily on liquid fuels to generate power. Liquid fuels are very expensive. In fact, the price difference between the liquid fuel and natural gas can be about 40 to 50%, depending on what the price will be. If you're spending 1 billion on liquid fuel, when it comes to gas, you do about 600 million. Wow. That's a significant saving. And so we as a government have moved away from the liquid fuel to power, and they will move to gas to power policy. What is a gas to power policy? Generate more power with natural gas. And so we got ENI and its partners to increase gas supply from about 240. Today they are doing about 280 million standard cubic feet. 40 million is a lot of gas. You can speak to Mr. Bemboache, he will confirm that. We got Jubilee partners to also move from around 90 million standard cubic feet. They're doing about 130 million now. We've got NGAS to increase from about 70. They're doing about 100 million. So cumulatively, you can see the difference. And that's why last year, when we had moved from 2023-24, we're doing 8-9 parcels of liquid fuel. We've reduced that significantly. Last year we did 4. This year we budgeted to even do 2. That is what the government's policy is. And all these will have an impact on the final cost of production. Okay. Because you need this, you need to do these forms to be able to reduce the cost of production, and eventually you'll have an impact on what the tariff structure will be. The next thing that we did as government, like I said, is that how do you deal with the distribution problem?
Which is what is the issue now.
Yes.
So you're saying it's because before this outbreak, lights were going off.
Yeah, pockets. Yes.
And the explanation was that ECG was carrying out either some maintenance or replacement of transformers.
Yes.
But then the previous administration says they did the same thing in trying to improve on the system. So what kind of system do you inherit that you are having to do practically the same exercise of replacing transformers?
It cannot be practically the same exercise. And that is why I sought to give you the basis so that you have a better understanding.
You've traveled to this point.
Yes, the basis. Because if you have a generational problem, you can have the best of transformers. You don't have the power to generate, to transmit to homes.
That's fair.
No matter how, if you like today, we should have an efficient system. We should reduce AT&T, that's aggregate technical and commercial losses. If you have a generational deficit, you have a generational deficit. There's nothing you can do. It's like having a beautiful car and you don't have fuel. Whether your car is S-Class, whether your car is a Maybach, you still won't be able to move. And so you need the fuel in there.
That's why the distribution challenge.
Yes, and that's why, as we speak, I mentioned that from April last year till today, except for last week, we haven't had any deficit in generation. And so the basis is not the same.
Okay.
The reason why we are dealing with the distribution issue is that there are a number of areas that we've had transformer overloads. In 2023, ECG lost over 800 transformers.
Wow. 800 transformers?
Over 800 transformers.
Wow. 2023?
2023. And this is not my data. This is what the former managing director of ECG, Dubik Mahama, has said publicly. In 2024, they lost over 1,000 distribution transformers. They were not changed. Because you know what they were doing previously? ECG takes the money, and instead of bringing the money into the cash waterfall mechanism to distribute, they were spending the money anyhow. And the records are there. The records are there. So they get the money, and they were engaging in procurement of cables. That's what they were doing to cronies. And so the money that they needed to do the necessary investment, they were not doing the investment. Imagine procuring goods or materials and having over 2,600 containers stuck at the port when you need the materials. How will you work?
2,600 containers?
Yes, at the port.
That had ECG materials.
All different sorts of materials.
Procured by ECG?
Yes.
Over which period?
From when we took over, that was the data we had.
I see.
When we took over.
The one you said we're missing.
When we took over, that was the data that we had. And so
the 2,600, have they all been found at
the port?
Have they all been located?
I don't want us to dive in. I will respond to that question, so don't worry about it. Any question you
see. So on the matter of the procurement.
No, let me deal with the distribution issue so that we don't digress. And so because there were underinvestments in the sector, in critical materials like transformers, we've had to deal with that problem. And so you have areas where they've had transformer overloads, they've had obsolete equipment, they've had damaged transformers. And like I said, if you generate and the transformers are overloaded, it will trip. There's nothing you can do. You have to replace them. And so as a government, we are doing over 3,000 transformers, distribution transformers across the country. In the northern side, we are doing 500. The southern side, that's the ECG operational areas, we're doing 2,500. Once we do those changes, we'll see significant improvement in our distribution side. We'll get the power through to your homes, and these transformers will not trip. What we are doing is that we are giving you transformers with the adequate capacity, some even more capacity than what it is. For example, if you go to Lashibi, the power transformer there was installed almost 30 years ago. 30 years after, what is the population? At the end of the day, you will need to be able to enhance the system, and that's what we are doing. And so we recognize that Akosombo had given us issues in the last week. The Akosombo is back. But the areas that have pockets of outages, if we haven't been to your place to change your transformer, what it is that those pockets of outages may persist. And that's why His Excellency the President pleaded with the people of Ghana that give us some time. We're doing a crash program in the next 3 months to be able to deal with all those challenges. And so we are dealing with the structural issues. We are dealing with losses. We are dealing with revenue collection. On cash waterfall mechanism alone, you can check. In 2024, the entire year, the money you had was 6 billion. In 2025, we collected 13 billion, more than 100% of revenues that they had for ECG. And what have we done? We distributed it for all these utilities to be able to operate. And so the problem is not just about just the outages. The power sector has enormous challenges that we have to deal with this structurally. And that is what we are trying to do as a government, to deal with each and every layer, have a comprehensive overhaul of the system, reform the system, and ensure that we have a better power sector, we have a better energy sector as we did. The minister's commitment is very simple, that the power sector that he met, you have a better power sector than what we've met. And what we met was nothing to write home about. And for me, we will need the support of government. As for civil society and co, we'll continue to engage them for them to give us all the support and ideas at all times to be able to deal with this challenge once and for all. Well,
we're going to go for this quick break because, Honorable John Darko, I'll come to you. Mr. Wache as well, and Lawyer Martin Pebu and Prof. as well on this matter. I still have Alfred with us on Zoom, and I had to get some detail from Richmond Roxon because that will be the basis for the next phase of the conversation. Because for a number of you, the Akosombo situation haven't been solved. We need to understand how what was existing before the Akosombo fire is also being solved. That's in the pockets of the electricity supply disruptions that we had, which ECG said was as a result of the planned maintenance and then the replacement of these transformers as well. So that's some detail we've gotten. We'll be back shortly after this quick break. Stay with us here on The Key Point.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abnanya Kwasmini, coming soon on TV3.
TV3, first in news.
or call 025.
In a world full of noise, clarity matters. Stories shape us, ideas challenge us. An honest dialogue moves us forward. This is a space for depth, where voices are heard and perspectives matter. Conversations with Dr. Abnanya Kwasmini, coming soon on TV3.
Welcome back to Key Point on TV3. We're live on 3FM 92.7 on a number of radio stations across the country, including Kesmi 107.1 in Tamale and beyond, and also in all 16 regions, or dotted on TV3 Ghana on Facebook and on DSTV channel 279, Voice of London Radio. My outfit this morning, as always, is by Kogra Clothing. It's the best version of you. You can call them for this and many other outfits you'll see me wear on the Key Point. They are located on the Springtex Road 18 Junction, opposite the Allied Oil Filling Station. Call them on this number for this outfit and many others on 026 055 8056. 026 055 8056. for some more inquiries. And as always, proudly brought to you by GASEM, the nation builder, and also Bank of Africa, as strong as a group and as close as a partner. Honorable John Darko, getting the details now of why there were some interruptions in power supply before the fire outbreak, the trajectory, that an explanation given by Mr. Roxon, and what is being done to address it going forward to ensure sustainable power, because there has been previous instances of transformers blowing because of the load. So even though an exercise was started by you, and I'm talking about the MPP, it had to still be built on because it hasn't solved the problem in its entirety. Does that tick the box for you?
Oh, well, thank you very much. And I'm happy you started this by saying that they are building on what we left.
Okay, so yes, in fact, please clarify. Yes.
So you are disputing what
I'm only saying, I'm saying you started an exercise, and that's why I asked the question of what you did then.
In fact, I gave you the numbers. Alfred, 1 second. Just 1 second.
I'll grant him the clarification. So that the context is right.
No.
Yes.
When anybody is talking, I don't.
No, just
the moment I start, then all the interjection. You made the
so
point.
I asked the question.
So he asked the question.
Yes, he asked the question.
Alfred, just 30 seconds. No, just 30 seconds.
Hold on, gentlemen.
Hold on. You've lost time.
So let him wait.
Just 30 seconds.
I'll come to you.
It is not true that they started the exercise. I've given you the data for 2023 from ECG. I've given you the data for 2024. And there are stories online where his own managing director at the time, Dubik, was crying that there were no investments.
Thank you.
But the exercise that was begun in their time was the renegotiation with the IPPs. That one, it was started.
They started somewhere. I will not. They started some work, but we reconstituted the team.
Right. So some work was started.
No. That's the renegotiation.
Okay.
But
thank you very much.
Renegotiated, we reconstituted, and then chaired by Dr.
Okay. Thank you.
So that one is even sufficient.
Okay, hold on.
From 20.
Thank you. Mr. Ako will have his time.
7. You should be happy you started that one.
Thank you. Thank you very much.
He's being heckled.
I think he's only complimenting a point you were about making. So you go ahead.
So
yes.
I mean, thank you for acknowledging that. But I think that out of the gate, one of the things I would tell my brother and the government is that the NPP kept the light on.
That's a lie.
So keep it on.
That's a lie.
Keep the light on.
The data does not
the
support
NPP
it. The data does not
Listen,
support it.
When NPP came to power,
you have to fast check it.
When
The data does not. We'll put the data on the screen. The data does not support it.
Between 2017 to 2024, the NPP government added 1,648 megawatts.
Which plants? Mention them.
Oh, well, I can mention them. Asogli and Car Powership is one of them.
Car Powership?
No,
but
Car Powership.
Car Power was they were commissioned.
No, but you said you added it. Those are not your projects.
But they have to be commissioned.
Asogli is not your project. Those are not your projects. If you say you did it, no.
So
if you you remember what they said about Car Power.
Yes.
You remember what they said about Car Power.
Car Power.
You remember what they said about Car Power.
You see,
don't peddle falsehood. The facts are facts.
No.
He didn't get a briefing well. I don't blame.
No, go on.
Listen, I am a very nice person.
We are all nice.
Don't get me into any mood I don't want. Let me make my point. We can make a point. Don't come and see and tell me that I'm peddling falsehood. Okay? So I'm telling you, plans that were commissioned. You asked me. In fact,
and that is not true.
I should have answered you because you are not the host. And no, I can also heckle you. Except that you
make your point.
I don't want to do that to you. Okay? So I'm saying that we kept the power on. It is incumbent upon you as a government to keep the power on. The people of Ghana have suffered enough. We are paying money, one CD per liter. We did that from the beginning of the year, or last year, for you to keep the power on. You are not keeping the power on. You are telling me that you have done what? What have you done? Look, I would say, if we go back to Akosombo, what happened there was unfortunate. I mean, we all Ghanaians, we don't pray that an important asset like this will be bent down. But as other stakeholders have said, this was highly preventable. We could have done enough to prevent this fire from destroying assets. And we are told that the minister has set up a committee to investigate what happened. Meanwhile, the president is there telling us that's an act of God. The president of the Republic has already come out with his reasons for the power, for a fire that gutted the place. Say it's an act of God. So what else are they going to investigate? So my point is that...
So an act of God should not be investigated.
But an act of God, how are we going to investigate an act of God? Something we couldn't have even anticipated. How could you investigate it? So but the point is that this government is not keeping the light on as the people of Ghana expected, in spite of the fact that we are paying huge money. Every month, the people of Ghana are contributing the doomsday levy in millions and in billions. It's supposed to go into payment of the IPP bills. We are aware that between $500 to about $700 million is owed to IPPs. You claim that you've paid. Meanwhile, people are crying. So the point is...
$500 to $700 million.
Yeah, $500 to $700 million. All right? So, okay. Well,
yes,
you can find out from
right
anytime.
Okay, please.
He will tell you what he wants to tell you. Of course, he's for the government. He won't tell you what the people of Ghana need to know. But you see, this government made so much noise before they formed the government, made so much noise about the power situation in the country. And they said that they were going to keep the light on. When the NPP was in power, we all know the situation. The light was kept on. We never had this kind of problem. And listen, as for the past 1 to 2 weeks, we can pardon them because there was a fire outbreak. But before that, we were having power shortages all the time. And he says he knows where I live. Yes, indeed, it's good to know where I live. But I can tell you that consistently we've had power interruption. You go to my constituency, you go to Swami, and this is an industrial zone. They use the power to do all their work. I was there last Monday. People are sitting by the roadside doing nothing because they don't have power to do anything. And look, maybe you guys have monies to buy plants at home, so you don't see when the lights go off. So you can afford to do this kind of politics that the power is on. But for some of us who don't have plants in our homes, we live in darkness. For some of us who depend on electricity, okay, to make money, to make ends meet, we are suffering. You go to magazine, the welders, they are sitting there, they don't have any work to do because there's no power. You can sit in Accra and say that you have electricity at home. Maybe because now you have become rich and you all have plants at home. So you think that everybody is like you. We are not like you. Okay? You go to people who need light, barbers. There's no light. And so when we complain, we are not complaining because we want to talk. When you do the right thing, we will praise you. Like I said, I believe that for the engineers who manage to put this thing back on, they need to be commended. We'll commend them when they need to be commended.
Not the minister.
Well, I mean, if you want to take the commendation to the minister, then let the minister also take the blame. You want the minister to be commended. It's fine. But let him take the blame when the light is off. That is what we are experiencing in this country. Look, there are people who will not be able to watch this program because they don't have light. They can only do that maybe when they have power in their phone and they want to watch it either social media or they will watch it later. This is a reality in this country right now. What is your reality? Your reality is that you have generator, you have plants at home, so you can afford to relax. Please, let's stop doing this to ourselves. I'm saying that as a people, we need to ensure that these kinds of things, especially the kind of fire distraction that happened, we need to ensure that it doesn't happen again because, look, we have a lot of infrastructure. What have we done about them? We need to do fire audits. You go to Ghana Gas, you need to find out whether their plant is safe. All these other institutions that we have, we power. We need to go and check. How long? According to Roxanne, it took about 7 hours to put the fire off, isn't it? Now, were we really prepared to fight fire? So let's stop pontificating because you see, when you're in government, and I can understand when you're in government, we think that it's okay to defend everything. But the people who live down there, they're the people who suffer. Now, because of doing so, okay, hospitals, their vaccines are being destroyed. Do you know that? Because there's no power to power their fridges. Now vaccines are being destroyed. They are losing their potency. That is the effect on the health of the Ghanaian. And you sit down and think that it's okay for us to keep the light off because you are in government. No, nobody is going to praise you. If you do the right thing, we will praise you. But so long as there's no light, we will continue to talk about it. We voted for you to fix the problem. The NPP government kept the light on. Keep it on.
Okay. Alfred, just your take on this energy situation, just briefly, because the Akosombo situation is an outlier. I say this because it's been restored and fixed now, but there are some inherent challenges which Richmond Roxon has been talking about measures to address it. I want to find out your thoughts very briefly. If you can unmute for me.
Hello?
Yes, please go ahead.
Okay, so I think, definitely I would admit that when you look at the power sector at an overall level, there has been some progress. Especially when it comes to liquidity in the power sector, right? So the fact that I would say one of the things that the government has done well is basically ensuring that the cash waterfall mechanism is working as intended, in the sense that every player in the sector is getting some form of liquidity, right? And so that's why we don't hear much about IPPs complain about them not needing to shut down because of liquidity issues. And so in the value chain, players are getting some liquidity, but I think that part is commendable. One of the things that the Akosombo situation puts in my mind, though, is, or brings to mind, is what happened to our reserve margin, right? So I know we lost 1,000 megawatts, right, which is huge. But if we had, I think our standard is about 18% of reserve margin, right? So if we did have that, should we have seen that widespread amount of power outages that was experienced in that period when the Akosombo went off, right? So that's something that I'm curious about. But I'm also curious about looking at, just because right now what we are doing is we're just paying some of the invoice. I think Roxy mentioned 100%, in some cases 90%. So we're still building up debt in the sector. So I want to look at the distribution of the whole operation, which is ECG, and the fact that what is ECG's losses at right now? Because right now we've just heard numbers around, it is getting more revenue now, but that doesn't really tell us much. What is ECG's aggregate technical, commercial and collection losses as of now, or as of 2025? I don't think we've seen any public data on that, right? So even as we are talking about revenues increasing, which is a function of tariffs and things like that, what is the actual efficiency measures which would improve the overall liquidity? Because I think sometimes a lot of the issues that we see in this sector, under investment and all of that stuff, is just that there is no money, right? Or the money is not available to support some of this stuff.
I see. Well, thank you, Alfred, for this quick take on it. and Mr. Wachi, can you hear me? Because of the sector that was inherited and what was the case now, and taking into consideration what ECG says is doing, I just wanted to understand from your perspective as well whether there was any significant investment or improvement in the sector prior to 2025.
No, there's always investment in the energy sector, except that the problems and the debt situation had been worsening. There has been significant improvement in liquidity in recent past, because ECG is not controlling all the resources of that it collects. The revenues are fairly shared to the power sector players, which of course has improved liquidity, and that's also due to the interventions that government put in place to make sure that all revenues are accounted for under the cash waterfall mechanism, which was not the case. But as Alfred indicated, we need to dig deeper and go beyond accounting for revenues, paying the IPPs, and making sure that the inefficiencies are addressed. Some of the replacements that are happening will address some of the problems, but the non-collection, power theft, those are things that need to be addressed as urgently as possible. That pushes ECG's losses above 30%, close to 40%. What that means is that if you give them $1 billion worth of power, 400 million is not coming out. And that has to be paid by somebody. And that is what the Dumsa Levy and others are doing at this point to be able to keep the light on. But that's not a sustainable way forward. What we need to communicate to the consumer is that the power system as we have it today doesn't allow us to meet the technical and prescribed benchmarks for the consumers. And effort could be afforded to make sure that there is some power in the system. But once you still have overloaded transformers, you have unreliable grid infrastructure, and also some generation systems not that robust, you're going to have the problem. And what is the benchmark? The benchmark is that your light should not go off more than 6 times in a year.
Thank you.
All right? And it's really going to be difficult for the power system as we have it today to really meet those benchmarks.
Thank you. Thank you very much, Mr. Bemboache, for that. I guess the last minute to you, Roxanne, as we round up.
Oh, yeah.
Yes, they've ceded the time.
Roxanne is the technical person.
Yes. Go ahead. In 30 seconds.
Yes, in 10 seconds. A decent job. Few clarifications. Number one, it is an absolute lie for anybody to say that car powership and Asogli were plans that MPP brought. We all know President Mahama commissioned car power in December 2015. In fact, they themselves, they even made noise about car power that it had been inflated at the time. Maybe he has to revise his notes and then get a briefing well. The second one is that when it comes to the reserve margin, it is true. And that's why government is working to bring on board additional capacity.
Thank you very much.